All right. Good morning, everybody. We got a lot on the agenda today. A lot. So we got Google getting or having the Department of Justice come after them and try and break them up. That is going to be a long haul thing that could last years. This was off of an effort that was started by the Donald J. Trump administration and then also followed through under the current administration. But there's a lot more. China's market down again today. Not as much as yesterday. Just down like the Hang Seng was down like 1.5%. Not too crazy. It could go up again. There's stuff happening in China that could bring it higher. I wouldn't short it, but man, I would just stay away from it personally. Oil's dropping another. Was down 1%. It looks like it's down 3% or 0.3% right now. There's analysts that were just talking today on CNBC that were talking about oil getting down to 50 next year due to severe lack of demand and oversupply. So I wouldn't expect that to go too high. That said, we've got Hurricane Milton, a Cat 5. It looks like it's dropping down to a 4 now. It just keeps changing and going back and forth, but it looks like it's going to hit landfall near Tampa as a Category 4, and that is a beast of a storm, probably one of the worst that we've seen in Florida in a very long time. We've got Tesla recording record sales for the last week of September in China. I think it was 27,000. It was the highest, or I should say registrations, the highest amount we've seen. Really beautiful stuff. Tomorrow night, We Robot at 9 p.m. Central Time. I will be hosting a session here. We've got Bitcoin. The Supreme Court authorized the ability to sell old Silk Road Bitcoin, 69,370 of them. If the government sold those before the election, I would have to think that they're just trying to sabotage themselves. So maybe that isn't a thing, but it could be a narrative. I did a post this morning. We'll look at it, talking about how, again, and I've said this a little bit over the last several days, Bitcoin can go down to 59, even down into the 57, 56 range, where it'll find support on the 100 weekly moving average. We'll go over that. We also had we had the HBO special. I didn't watch it. There was one video portion of it that came out of it that I'll show you. It's just fucking stupid. I wouldn't even waste any energy on it. The guy they're talking about is not Satoshi. It's absurd. He's standing there with Adam Beck, another buddy of mine, a guy who retweets me every once in a while, a guy who's been in this space forever too. But it's just it's entertaining to say the least, and it just shows how horrible these kind of like surprise documentary, like we're gonna find out all this stuff. You're Satoshi Nakamoto, talk about it. Like it's just a waste of energy. And these guys obviously don't know enough about Bitcoin or crypto. Anyway, Republicans also had a 50% more registrations in September versus Democrats in key swing states. That's another interesting thing to note. The election is now less than 4 weeks from now, so a little over 3.5 weeks. That's crazy. Can't come soon enough. I'm so ready to be done with politics. I fear that I might not be afterwards, but I hope we are. All right, let's get to it. We got a lot to cover today. And I'm going to see real quickly here. Let's go to economic data. Before we do this, I'm just going to load this up and silence it so it's sitting in the background. So I'm ready to easily jump over to it when the time comes. But we're going to jump over into economic data. If we look over here, and thank you for everybody saying good morning. Let me just read here real quick. Disease Codex said, last time I checked, my insurance would be $400 a month. He said, Disease Codex said, New York doesn't have Tesla insurance. They have 0% interest if I buy FSD. Oh yeah, for the Ys and the 3s. That's another thing that I didn't put in my notes, but they're offering 0% offers if you put 15% down on a Tesla. And they're doing this really smartly before We Robot tomorrow at 9 p.m. Central Time. So I think that's pretty brilliant. But they're offering a 0% offer if you put 15% down. And I didn't know you had to get FSD. Is that true, Kodak? Or where is that? Is that a part of the new incentive plan? I thought it was just put 15% down, get 0% interest on a Tesla, which is brilliant. Getting people into FSD will probably be easier after this event, but let me know if that's the case. Ethan said, good morning, Disease Kodak. Last time I checked, my insurance would be $400 plus a month. That's insane. I pay way less than that for my Cybertruck, for my Y. I might pay a comparable amount for both of those. But again, that's by region too. New York just might be really bad. It wouldn't surprise me if it is. Disease Kodak said, I might do it anyways and use your code. Yeah, if you need one, man, let me know. You're not going to go wrong with a Tesla. The 0% offer, I think, is sweet. And the only thing is, which one are you getting? Is it the Y or the 3, or what are you getting? A Cybertruck? Like, what are you getting? If you're getting the Y, maybe you want to wait until spring. I've heard that's when the Juniper is going to be coming out, and that would be a sweet car to step into and getting the new version of the Y. Christopher Brown, good morning, fam. Jesse is Satoshi. Yep, you guys heard it. You guys heard it for real. That's what happened. Disease Kodak, I wonder if I can robo-taxi my car while at work. Dude, I got a tablet. I just bought a tablet. It's like a Samsung Galaxy 10 Plus. And I'm putting this right in front of my steering wheel on my Cybertruck. Don't tell anybody. But I'm gonna watch YouTube videos while my car drives me around. It's gonna be fucking awesome. And look at TradingView, of course. I'm gonna have a split screen, TradingView on one side, a YouTube video on the other. Don't tell the police. Rocky A, anyone watch that BTC? No, I just think it's fucking stupid. People are obsessed. No, that you shouldn't. I mean, it really, again, Satoshi's, like, I played this video from Jack Mallers yesterday, just a portion of it, but Satoshi didn't want to be discovered. And frankly, it's Hal Finney. It's Hal Finney, and he's fucking dead. So you can't discover him anyway, and it doesn't really matter if you do. But I think we should just leave him alone. As long as it's not the CIA or NSA or some other shit, I don't care. I really don't care. And I think he's dead. So I think that makes it pretty easy. We don't have to worry about him spending his coins, because when you're dead, you can't do that. Yeah, I have to get FSD too. Interesting. Okay, I didn't know that. I'll have to look at the incentive. We can pull that up in a little bit too. Got a Model Y 2 months ago in the UK and got 0% no FSD. See, I thought that's what they were doing here too, Antonio. So it'll be interesting to see. Disease Kodak, I would get 3. Disease Kodak. Oh, I got a super sticker from Double H. I got some PHP. Is that what you gave me yesterday? Is this crypto? What are you giving me? Yesterday I thought I got a pair or something. I appreciate it. Either way, I appreciate it. I don't even know how much it is, but I do appreciate it. What did you say here? Hippo. It's a hippo character running at high speed. His legs forming a ball-like blur. I love how we get a description in the restream. Disease Kodak. I would get a 3. I don't even need a car. I can wait for the Juniper. The Juniper, I think, would be sweet. Oh, I'm going to sneeze. Okay. There you go. I don't want to blast you guys out. But yeah, I think the Juniper would be great. PHP is Filipino. Well, thank you, man. I really appreciate it. Yeah. Okay, PHP is Filipino. Okay. All right, that helps. Good to know. Hope you're having a good day, Double H. All right, let's look here. So Wednesday... so interesting things, and I noted this a minute ago. So somebody, it looks like, let me jump over here real quick. We got a lot to cover. I'm gonna try and keep things topic based, where I'm kind of covering things and not jumping all over the place. I need to get better at my organization for that, but there are things I want to cover. So real quickly, Bloomberg, super biased, try and sell you China. Bloomberg said it looks like there's no stopping the rally in Indian bonds. Already the best performers in Asia this year. And I put that's because India's economy is much stronger than countries like the USA and especially China. And when I say stronger, again, obviously China and the USA dwarf this one, right? Obviously they dwarf it. But to be very clear, I'm talking about growth. I'm talking about growth in economies, right? And the strength of an economy going forward and its ability to be able to weather a recession. And there's a lot of shifts happening to India away from China. And obviously, the United States is a very strong economy, but we've got our problems, debt load being a huge amount, just unsustainable debts. So I said, this is why they were able to not lower rates last night. It's probably India's time to shine. And I do agree with that. I think India is going to do really well. I think Argentina is probably going to be a multiplier of that because they're so much smaller in size. But again, just trying to make the point that these guys didn't raise last night. They're sitting in a strong position. Or I'm sorry, lower rates last night. They're sitting in a strong position. They'll probably be one of the last major economies to lower rates. And there's a reason for that. It's their strength, right? Also, let's jump into mortgage. So mortgage-related data. This isn't too crazy. Like, again, it's weaker heading into the winter. That's seasonality. It's also because of just the oscillation in the rates. So the mortgage 30-year jumped a little bit. But again, it front ran major drops. And then after the 50 BIP, it actually went up a little bit. That's just an oscillation. There's going to be plenty of bears that are like, oh my God, rates are going up. The end of the world's happening. Bond market hates the Fed, all this stuff. It doesn't matter. This is a temporary move. But when in line with, again, when rates like go up point, what is it, 0.2%, 0.22%, from week to week, and then you're going to see mortgage applications decline. Again, also very strong over here in the last, since August, and in August even, like some of these big, impulses higher are really good. And but it's decreased. It's gonna it could continue to do that throughout the rest of this year. This isn't crazy. And if we look at the mortgage market index, it's lower than it was previously. But again, we've been talking about how the fact we were going back to levels that we hadn't seen in over 2 years. So this is all pretty normal. The refinance index, again, weak. Purchase index, not that weak actually, but this is all a normal part of the process. Now, I do want to jump because, again, we're trying to cover other markets around the world too, especially ones that are close to us and that might have some kind of impact or be sending some signal. And I want to look at Mexico because Mexico is one of those countries where they've also got a lot of problems. They're our neighbor to the south. And at the same time, they've been seeing like a resurgence in their economy because a lot of it, auto manufacturers and other manufacturers that don't want to mess with China and don't want to be that far away have been going there, right? So we want to look here. It says inflation rate year over year is 4.58%. The forecast was 4.6 and the consensus was 4.62. So this was a lower than expected inflation rate, which is good because in July they got pretty high. But if we go back here, they haven't fallen quite the way we have. But if you compare them to where they were in the 80s and even part of the 90s, this is nothing. This is a nothing burger for them. They're used to what much worse. Now, again, they haven't had much worse in the last 20 years, but this economy has weathered much bigger storms than this. Core inflation. Let's go back here. So core inflation really appears to be coming down, which is weird. I shouldn't say weird, different than what we have. Our core inflation has been a lot stickier, and then the overall inflation has been dropping. But if you look here, it's 3.9% forecast, consensus 3.95. It came in at 3.91, so the lower end or the lower end towards the forecast. And if you look, you can see how this has come down pretty hard in comparison to the overall inflation. So they kind of have the opposite of what we have, which is fascinating. Now we do have some more data. We have at 9 o'clock, we have wholesale inventories month over month. We've got a total of 6 Fed speaking today. We got Fed Logan, Barking, Goolsby. That's this morning up till 9:30. 9:45, Logan, Williams, Barkin, and Jefferson. And I don't know if these are different times they're speaking or if it's some replication in how this is being outputted. We got Collins, we got Daly, we got every Fed is going to be talking today. But really, there isn't much more outside of that. If we look here, we've got the FOMC minutes. We don't have anything crazy in regard to rate decisions. But yeah, it looks like a pretty light day. A lot of interesting stuff coming in for Japan, including PPI overnight. Tomorrow's all the inflation data, CPI, jobs, and then again, Friday's just going to be a ton of that too. Thursday's going to be a nuts day, guys. It's going to be a crazy day. I got to go to a funeral. I'm probably going to skip the market recap, and I don't know. Maybe I can do it. And then we're going to have at 9 p.m. We're going to have We Robots. So it's going to be nuts. Double H. Yes, PHP is Filipino peso. I think I lost my membership to your channel. Still finding a way to resubscribe to your membership. Oh, sorry to hear that, man. Is that just some weird thing because of the currency difference or something? But either way, I appreciate your support, man. I really do. Thank you. And you must be a member in here. You must be a member. Otherwise, you couldn't comment. So you have a membership on here. You must. So I think you're good. All right. So again, nothing major. Economic data pretty light today, but some very interesting stuff coming. Let's see here. What else do we have for emerging markets? Vietnam is 7% of India's population, and it has a higher share than India in global manufacturing exports. We're that much lagging, and we're claiming a huge manufacturing growth during the last 10 years, precisely when Vietnam outperformed us. So again, we're talking about I just want to reiterate this because the narrative is that India is just becoming a powerhouse. But if you look at Vietnam, they've been crushing it and their population is much lower. This is kind of one of my arguments with Argentina, too. It's easier to steer a smaller ship and make it go up than a really big one. But I do think you're going to see massive, steady growth in India over a long period of time. All right, let me look down here. Morning all, morning boys. Disease Kodak, like and comment on Jesse's X post to boost the market open. Yes, please do that. That's a very good point. Thank you, sir. Let me just jump over to that real quick. I'll actually maybe grab that, put it over, and I'll move the post to the top. Actually, it probably is the top, right? It's probably the top. Let's see here. I think this is the last thing I did. I'm pretty sure. Yeah. Okay. Cool. Yeah. Boosty, please respond to the above post for greater visibility. All right. So yeah, thank you for that. Thank you for the reminder. I should probably do this too. Should probably boost it myself a little bit, huh? But yeah, so we have lots going on today, guys. Lots going on. Let's see what CNBC is talking about right now. They're still talking about the Department of Justice probe. I actually want to back up here. I want to see if I can find something. There's a bunch of stuff about budget deficits. That guy was a horrible representation of what's going on with the plan. Oh, right here. This is what I want. I want to talk about oil prices. I think what he had to offer is very insightful. So we're gonna pull this up. He's gonna talk about how oil is gonna be coming down into the 50s next year because of massive oversupply. So that's a wonderful thing for the markets. Right now we're sitting at 73.38, down 0.6% on the day. This will be disinflationary. It will remove base costs for everything. There's a lot of signal here. Let's listen.
And now the answer to today's Aflac trivia question. Google announced its deal to buy YouTube on this date in 2006. What was the price tag? $1.56 billion, which is the equivalent to $2.4 billion today.
Crude prices steady this morning. You can see they're 73 after a slide yesterday of 4% on news of a possible ceasefire between Israel and Hezbollah. But markets are still wary of an Israeli retaliation against.
And they should be. But again, if prices are set to come down because of massive oversupply, then midterm, not a big deal.
Iran's missile barrage from last week. Joining us now, Tom Closa, Opus, global head of energy analysis. So I guess it's quiet right now, Tom, on that front. But if we go to before the most recent, it's gotten, obviously, it's been upgraded, the possibility of even a wider conflict. But before that, what were the dynamics? You had Russia still selling oil, right? You got Iran still selling oil. You got the U.S. As the largest producer, more than, historically than we ever have before. So was it a well-supplied market prior to the worries about the Middle East?
It wasn't particularly well supplied, but it's never well supplied in August. August is the highest demand month of the year for crude oil.
Okay.
It was pointing lower, and I think it's still pointing lower because you have to consider that there's probably about 600 or 700,000 barrels a day of additional crude for export that's going to come out as temperatures moderate in Saudi Arabia and Iraq. You throw that in with the fact that you had a ministerial meeting last week that suggests we will see additional crude on the market from OPEC Plus in December, and you have a market that's pointed to the downside. There's the possibility that you could have a wider conflagration in the Middle East, but it's not a probability. It's a little bit like there's a possibility the Giants and the Jets may win the Super Bowl this year, but I wouldn't be betting on it.
Now, here, in regard to his comment, I do agree. Like, you could have a major escalation, but I don't know if it's how impactful it's going to be on the price of oil. They're going to be pretty strategic. I don't know. If oil prices do go up, it's going to be really, really tough, I think, on the Biden-Harris administration if, for some reason, Israel, because, again, we know the U.S. is planning with Israel on their strikes, so one would assume that those would not be on the Iranian oil facilities because they would know politically that would be a nightmare before the election to skyrocket the price of oil and look like, warmongers, right? That wouldn't be a positive for the current administration. So I do agree that it's probably less likely that this would happen, just like it's less likely that Biden-Harris administration would be like, yeah, go ahead and sell that $4.6 billion in Bitcoin, 50% more than what Germany dumped right before the election, because we want to make sure we don't get those votes. I don't think they'll do that.
Even with the new coach, I guess. If Israel were to not go after the nuclear sites, but were to just really try to strike a blow against the refineries, would that change the dynamic?
I'm sure that in diplomacy right now, they're having these conversations. And if the Israelis do what they did back in April, when we had a similar analog to this, and just hit some military targets that have nothing to do with oil production, I think you'll see the market drop. I mean, I think that oil is destined for much, much lower numbers, and whoever wins the presidency next month is going to have a problem maybe of a little bit of oil deflation. All of the balances
There is no problem with oil deflation. That is not a problem. I'm sorry.
for 2025 point to more oil than the world really needs. And if you have OPEC Plus coming back to the market with some of that production that they cut, I think it's a real problem in 2025.
It is weird. $50 oil would be great. We could refill the SPR, but then the industry starts shutting in certain non-profitable fields, I guess, and then we could cause the next price spike. It's hard to be you, Tom, to try to figure out because everything has got a unintended consequence or an opposite effect on what you're watching.
Yeah, it's very dynamic, though, and it's interesting to that extent. But next year is definitely a problematic year. I mean, even the most bullish investment banks think that, we could dip into the 60s or even into the 50s because we will have more oil than we need next year. The other thing is you don't have the big money chasing oil anymore. Earlier this year, I said it was like the oil market's like Aaron Judge. It doesn't chase. And when you're not chasing crude high.
This is a very, very, very important piece that he's talking about, and I'll summarize my thoughts right afterwards.
You're not putting a lot of money on that side of the market, and you're not getting that investor premium that was there for most of the last 20 years.
Do you have a Knicks analogy?
So again, over the last 20 years, we had the investor premium, right? We had people that would come in and they would buy the dips on oil with these contracts, and they would help sustain the price. Nobody is betting hard on oil anymore because we believe that we're passing peak oil. And so people are betting, they're trying to bet on things that are going to make them a lot of money in the future, not things that are slowly dying. And don't get me wrong, we're going to use oil and petroleum products and all kinds of things for a very long time. But when you have an industry that's dying, just like an investment or a company that has been around for a long time, still generates pretty good cash, gives out dividends, but its forward PE is still like 9 because nobody wants to invest in this thing because it's just slowly dying and revenue growth is maybe like negative 2% year over year. Like you get to the point where there's no support there. There's no support there. And that's the part I want you to understand.
But we did the Jets, Giants, and
is a hotbed of counterfeits coming into the United States. China is, Mexico, Europe. You might ask why. It's because it's a lot cheaper. First of all.
Oh, and it looks like this is the latest live. I'm just going to refresh here. Thank you very much, Double H. You are very, very helpful, man. I appreciate you being so kind and looking to upgrade. That is very nice. Yeah, and all these tips too. I really appreciate it. Thank you, sir. All right, so let's keep going here. So again, we talked about let's look at a few things. Let's just look at the price of oil super fast, and then we're going to see how the markets are doing pre-market. And then I want to show kind of what the Hang Seng Index is doing. We talked about this yesterday, you guys. Good rejection off the first layer of resistance here. And it looks like we're trying to get under that 200 monthly moving average. This is good stuff. And if we line it up over here on the weekly time frame too, we got a perfect rejection. Didn't even make it to the 200 weekly. Wick down really quick under the 100, this yellow line, and then wick down under the 50 moving average, this purple line. So very clear rejection in my eyes for the price of oil. And if threats of nuclear apocalypse and or nuclear facilities being blown up in Iran a ground incursion by Israel into Lebanon and potential of bombing the ports in Iran where they ship out 90% of their oil, isn't enough to spook the markets to go a lot higher. I don't know what is. So I'm still placing my bet that we're going to be in the 50s here, and probably by early spring. I should actually probably mark this better. So maybe let's say March, before summer travel really kicks in. I could see us down in the 50s, testing this support zone down here, and that would be pretty beneficial to the economy because of the deflation that it creates in the base cost of everything. So we're not hating that at all. Let's look real quickly at the stock heat map. This is yesterday's performance. Let's switch it to pre-market. Pretty flat day. Again, the big movers are still moving though. Nvidia is still going. I think we still have a run on Palantir too. Let me pull that up real quick and see what it's doing in pre-market. Palantir is reaching its parabolic phase. So again, I wouldn't be surprised to see it hit new all-time highs around 45. And again, I've got this resistance level that goes up kind of towards 50. I believe this is where we're going to stop. Maybe we even overshoot that. It's hard to know when something's in parabola and it's defying gravity where it will stop, but it will stop. It's currently a $93 billion company. Maybe it stops at 110, 120 billion. When you look at revenues, what are we even at right now? I'm just going to glance real quickly at this, and then we'll get back to all the other big stuff today. But if we just look at Palantir over here, the forward PE says it's almost 100. So again, and it can get crazy. I mean, you have to realize this, guys. The PE is 244. So the current PE is pretty high. But and it's this thing again that could get it towards 300 for the PE ratio before it has a major drop. And to be clear, that like Tesla was over 1,200. So crazy shit can happen. It doesn't mean that it's just going to keep happening. And I think we're at the stage with Palantir where a lot of the avid people for Palantir are now getting to the point where they're like, nothing can go wrong with Palantir. It is the next, Jesus Christ reincarnated. You know what I mean? It's like, it's almost a religious fervor thing at this point, and that will only increase as they continue to make more money. And this isn't me hating. This is just me talking about market psychology because you have to understand this. It's very important to understand because there'll be people that let go and there'll be people that are unable to. And again, if you're holding it for the long haul, you're a long haul investor, whatever, it doesn't really matter, right? But if you're not that and you're trading in and out and you're just trying to get rich overnight, you're probably going to regret your decisions later on. That's my take. All right, U.S. economy. I said the conclusion of this election should open up the floodgates. So what is this? The uncertainty index. Some of don't know and uncertain answers on questions on 6 different questions. So if you look, this index goes back to 1986, so about 40 years ago. And if you look over here, we're at the greatest levels of uncertainty that we've seen in a very long time, similar to that of 2017, similar to that of 2021. Let's look at what happened to the markets real quickly after that time frame. We'll probably use the NASDAQ because, again, it's an interesting market because it's so technically backed, right? So let's just look at this and see what we can. So what did we find? Again, what was our time frame on that? So, and I'm showing you guys this because I want you to think this way, okay? So 2017, peak uncertainty right around the beginning of 2017. And then peak uncertainty about the end of 2020, beginning of 2021. Let's look at what happened with markets next because this is the way we should look at stuff. All right. So let's look, 2017. So we were at peak uncertainty right here. What happened in the next 2 years? Straight up. Okay, that's interesting. Now let's check 2021, peak uncertainty. Now over here, what was our response? Right about here, we had peak uncertainty, and we actually went up a lot, right? So right over here, and again, that was like, well, how long did we go up over here? So from the early 2021, we had peak uncertainty right around here. You can see some chop. And then we went up, oh yeah, a shit ton. Yeah. For like 8-9 months, we went up afterwards. And so now we're at peak uncertainty. We've back tested the .618 on the NASDAQ. The S&P is doing that right now. It's right around down here. And then we're seeing peak uncertainty again, where I would argue that it's probably going to have a similar result, right? And we could probably go back and back test other data points and come to the same conclusion. So again, I want to focus on the fact that just because they say these things doesn't mean that we can't go up a lot. It doesn't mean that it's not a counter indicator of what they're talking about. So remember that. Joseph Mock, what are we buying, fellas? Depends on what goes down. Joseph Mock, sell Tesla for an EO? Fuck off. No, don't do that. You could do that. If you want to, go ahead, Joseph. Just do that. Andreas, can we get your thoughts on Palladium, the chart? Yeah, I'll do that. Here, I can take a quick look. I don't ever look at Palladium at all, but we'll throw it up. We'll throw it up real quick. Did you have more to this than just asking about it? Are you just curious about how Palladium trades as a commodity? Do you have some overall theme that you're curious about in regard to Palladium? Let's do PA, it looks like. That's Palladium Futures. We'll go ahead and save this. I mean, I would guess it's going up. I would guess it's going up because I'm looking at a monthly chart. I'm looking at support under volumes, under the 200 moving average. I'm looking at oscillation where we're seeing the MACD curling up. I'm looking at the RSI. Again, it hit basically oversold territory in the 30s, and it's curling up. And the price tried to go down, and now it looks like it's a bull flag. So, and it looks like it's in a breakout zone. So I would guess that this thing is going up. And again, it's not even a bull flag. It's like a falling, broadening wedge. I would guess this thing is going up without knowing any other fundamentals about the commodity. It looks like a good investment opportunity. But again, this is just from technicals. Casper Holt, are you going to listen to the FOMC today? Maybe. I might. It depends on timing. I might. We'll see. Probably. Sarthak, what do you think about Celsius, sir? We'll look at some of that later. I don't want to go too far down this rabbit hole. I want to make sure that we're still staying on point with all the other economic data that I want to get through. So bring that stuff up a little bit later, guys, and we'll go over it. By the way, my super chart did not pop up, lol. What super chart? Andreas, it seems the price spikes during the start of the war and dipped seem like a nice opportunity. I mean, from a technical standpoint, it looks good, bro. All right, we got Jill Carey Hall talking about Fed rate cuts and small caps. Might listen to that. I don't know her. But anyway, let's get through this first. If government keeps running up the debt to even higher levels, that will compound the problems for future generations, but it'll be bullish for stocks. This is something few people seem to understand. We will see stocks going up. You could see federal deficit spending over here. Look at this. As a percent of GDP in the 40s, look at what happened. And look what happened to stocks for a very long period after that. And again, federal deficit spending didn't do much down here, but all of a sudden it started to really build up again. And then what happened with stocks? They went right up, right? And then federal deficit spending during the times of the dot-com bubble. After the dot-com bubble, about 2003, we started really spending again in the government. And right down here, you can see where it picked up, and that helped boost the economy. Then we rolled over again in 2008, heavy. But what did we do in 2008? We just provided wicked amounts of liquidity, and we haven't really stopped. And we're getting ready to have an even larger spike over here. It's not as effective as it used to be because a lot of it's going towards interest on debts, but it's all, again, just money printing. And so this will have that same effect. And I think few people understand this, that the government spending, again, can be horrific for the economy over the long haul, but over the short term, it's great for stocks. So understand that concept, if you would. Liz Ann Saunders, pricing pressure seems to have normalized for small businesses with a percentage seeing higher prices and blue, and then planning to raise prices next 3 months, orange, settling into a range, albeit higher than pre-pandemic level. So what she's saying here is that we're still probably going to see margin expansion across a lot of these companies. Oh, Danny, thanks, dude. 10 memberships. To everybody that gets those, please enjoy them. Please thank Danny, okay? I really appreciate you, bro. But again, the thing to note here is that again, prices for small businesses are still going up. Their expectations for going up over the next 3 months are higher than where they are right now, and that's all higher than it's been really since 2005, 2006, and then around late 2008. So these are record levels. And so don't expect the world to fall apart right now, guys. You just can't. Now, that all said, we do need to be realistic here. And I actually think this could be one of the best performing years in recent history. And I mean, again, going back to the 1900s, so far ago. Again, I would have graduated in like 96 had I. But you can see how we've done, right? You can see how we've done since 2000 in the last 24 years of performance. It's been really good so far this year as a whole. Now, the largest beneficiaries of this have been large caps. They haven't been small and mid caps. And they haven't been underperformers from the pandemic, route. And then again, when we were falling apart in 2022, when the Fed was raising rates at the most aggressive rate in history, it hasn't been those. So we have rotation coming. But if you've done really well in things that have done really well, some of that might be coming to an end and taking a breather, because at least right where we are right now at this time, we are at the best performing. If you just look at this one little time frame, we're above everybody, like every other year for the last 24 years, actually. So this is crazy. So I think 2000's in here. It's 24 or 23, whatever. Doesn't matter. The whole point being is, if you've had things that have done really well, like your Palantirs, like maybe NVIDIA's, to continue to think that you're just going to get wicked upside does not make a lot of sense. Also, I don't know if you guys know this. This is one of the greatest economists in history, Milton Friedman. I don't know how many people actually know him or have listened to him, but I do agree with what he's saying here. And I'll talk to his point about oil, but I want you guys to hear it in case you have not, because it's very smart to understand this.
Inflation is made in Washington because only Washington can create money. And any other attribution to other groups of inflation is wrong. Consumers don't produce it. Producers don't produce it. The trade unions don't produce it. Foreign sheiks don't produce it. Oil imports don't produce it. What produces it is too much government spending and too much government creation of money and nothing else.
And that is 100% true. Now, don't get me wrong. You can get temporary increases in prices, and a lot of the times we talk about that being inflation. But what his core point is true inflation comes from government money printing and government spending, and again, massively lowering rates so that banks are acting like the government. Because if you do that, you increase lending, you're having banks print money out of nowhere, right? Because think about it this way. If you only have to have 5% reserves for whatever you're lending out, then if rates have dropped a lot and you've got a decent amount of deposits, you can just lend out like fucking crazy. And that money you're lending out didn't exist before you lent it. I don't think people think of just like money as physical money coming out, but debt is money too, right? And there's so many aspects of this that go a lot deeper, but this man is brilliant. I want you guys to kind of think about the concepts of money and inflation in different ways than you've probably been taught over time, or things that aren't necessarily very intuitive, okay? So also, central banks around the world are juicing their economies. This will lead to further market upside. This segues into exactly what I was talking about. The Bank of New Zealand, even though India didn't cut rates, the Bank of New Zealand cut it by 50 bips. A lot of the West is going to follow our lead on this cut because they kind of have to. They have no choice since we're the world reserve currency, and there's just so much power that we're able to demand from all of that unless they're producing a lot of goods for us. So I just wanted to put this out there too, that again, the money printer go burr, because like I just said, when rates go down a lot, you increase the chance of lending. And when lending occurs, that's extra money in the supply that didn't exist before as in the form of debt. Okay, so understand these concepts. Also, I found this chart that I was trying to reference yesterday. I was just saying, hey, we're over here in the Fear and Greed Index. We can actually go a lot higher than we are right now. Again, incorporate the thought process of the fact that we've had the best performing market in the last 24 years sitting in front of us right now. But we could go higher, and maybe we grind, and maybe we go down a little bit. Again, the next 3.5 weeks, guys, is going to be a lot of turmoil. There's a lot of investment advisors that are saying, wait to see who's going to get elected. Wait to see how chaotic it is at the election. Wait to see if it's contested. And then figure out what you want to invest in, because we're developing our plans. We'll tell you what our plans are closer to election time. And then based upon who you think is going to win, you can jump in and do that. But again, if you missed this post, it's because I have it to subscribers on X. It's $5 a month to subscribe. If you guys subscribe on there, do it on the web app if you would, because that way we get a lot more of the money. There's a 30% fee if you do it on mobile. So mobile subscriptions really suck. But I just wanted to throw this out there. I want you guys to be clear on it. Also, Income Sharks posted record number of long positioning in U.S. equities. I don't think it's crazy to de-risk or take some profits. There's a reason why, especially ones that are performing really well. Like yesterday, I did really well on MSTX. I got a feeling that's going to do well today. Why I've been deleveraging out of that and then buying into things like even BITX, a Bitcoin 2X fund that was down 3% or roughly yesterday when I bought it. And even though my MSTX was up almost 10. So it's good to kind of rebalance and to think about that risk. I do agree that, we could have a short-term pullback. We're having the best year ever. All right, let's keep going here. Yeah, this just, again, I showed this yesterday, but this is just a road in North Carolina. They've got to replace all of the roads because all of them run basically their drain areas and they were overwhelmed. Just a massive amount of destruction there that isn't getting fixed quick enough. Let me look. So let's go back over here. We will look at, again, one more time, pre-market, see how we're doing. Just refresh here. Looks like energies and minerals are down again today. I think we can expect more of that. It looks like retail trade, again, Alibaba, anything Chinese getting hurt. Tesla down 0.4%. I said this before, and I'm going to say it again. I think Tesla is going to be a buy the news event because we really haven't performed that well. The stock just hasn't done that much. I'm going to jump over it real quick, and then we'll get back to the rest of the macro stuff I want to talk about. But we have a beautiful setup. We have a very clean, by far, like I was hoping this was an inverse head and shoulder. It was a big hope, but it's so ugly in comparison to what we have right here. This is such a thing of beauty. And when you have this inverse head and shoulder, and then you have a perfect cup and handle forming, and then you have all the support zones from long-term resistance of almost 3 years, this fib line, peak volumes right around here, and you got the 200 moving average on the weekly time frame sitting underneath of you, and this would be the best time to find support on it. I think we're set for more upside. I don't care what Tesla does today. I think it's going to be a buy the news event. We haven't really had the run that you would expect going into something like this. I think people are doing a lot of discounting versus Elon Musk, and I don't think that's warranted. And again, if Trump wins the presidency too, I think this would just be an even insaner move. Not that will happen. I think he will win, but again, as I've said before, I don't know if he'll take the presidency. But I think there's some big opportunity here. All right. Real quickly, I'm going to jump over to CNBC again. I don't care about this economic agenda stuff. I already know what this is. This guy's probably a Democrat, and he's going to push the Democratic narrative. They're pretty consistent about all of that. Talking about Roblox. I don't give a fuck about Roblox. Let me see. I wanted to see, right here. This is what I care about. I want to see what she has to say. She might be an idiot, but I don't know her. And I try and give everybody a chance so I can figure out who they are and see how knowledgeable they are. Because if they're really good and what they're saying makes a ton of sense, then, her smile's a little awkward. But if they're really good and what they're saying makes a ton of sense, I usually like to follow those people on X or in whatever way I can so that I can get more of that knowledge and thought process. Because if you can find people in your life that are really clear about how they can think about things that are happening and or give a different perspective, but a very interesting and thought-provoking perspective, you should include them in your time because it can benefit you a lot. So we're going to listen to this. Let me just check comments real quick before we jump into this. Joanne says, Milton is awesome. Casper says, where would you place buy orders for MicroStrategy if you were to do so? I'm considering where it could drop. I actually think it's probably right near where it would drop. If it drops, it's going to drop a little bit. It's not going to be super crazy. It's hard to know, though. Again, let me just show this real quick before we do the video, and I'll go through a couple more comments. So Bitcoin is already in the 61s. It says 61,759. I think we're going down here. How steep of a drop is that? Let's just look, because I think you shake people out one more time. It's just like it's the last time. You might as well. That's an 8% drop, so it is pretty steep. Now, I think MicroStrategy will probably be the strongest, especially if we don't see Michael Saylor sell here. And I don't know if he's going to. But maybe around 170s, high 170s probably is a good place to buy in. Maybe even 180 just to be safe. If you were going to put in a buy order, I would say like and honestly 180. Like there's going to be a lot of people at that level. Maybe like 181, and because I don't think we'll go down a ton, but maybe it goes down more. I mean, don't sue me, bro. But it's one of those things where I think right now, and again, it's down 1.55% in pre-market. If it goes down to 178, that's a 5.5%. So that means that it's outperformed Bitcoin in the drop. If it went down into the low 170s, that would be comparable in a Bitcoin drop. So take it for what it's worth. That's kind of what I'm thinking right now. All right, let's keep looking at comments here. All right. Disease Kodak. Great stuff, bro. I need to rewatch this party to make sure I fully understand that, or this part. Super important. King NYC. Jesse, have you heard about Fidelity holding customers' deposits for 3 weeks? I made a transfer from my bank Monday, and it won't be available until... That's a long time. I don't know why they would be doing that. I haven't heard about it. I don't think it's like any kind of contagion risk or anything, honestly. Fidelity's a pretty good investment company. Anthony from X said, good morning, Jesse. Trim some MSTX overnight around 30%. Dude, when you make between, what was it, yesterday? I was trimming positions and probably averaged 35% gains on my hood investments. And I put that money into a bunch of other things that can do really well that were already kind of beat up. So, and that I want to get into, especially Bitcoin related ones. So I'm very excited. I'll continue to do that if we get outperformance in any of these. Today could be a down day. We have major economic data coming Thursday, Friday. We got the Fed speaking today. We don't really have any other economic data that's going to show strength. You know, I don't know. We'll see what happens. And again, if we just look over here, guys, let's look at the greed index right now. We'll get to that video in a second, but we're at 71. So again, we're still in that high range, and it could roll over. It could roll over, maybe get into the, maybe back test again towards like the 60s, or maybe even like 59 or something where it's like we're not in greed and we're closer to neutral. We could do something like that. We've had an amazing run. So I think it would be folly to think that that's not possible. But again, sometimes what is possible and what people think is probable doesn't end up happening because the counter ends up happening a lot of the time. I love this, though. I love that Bitcoin, this is why I'm stacking in the Bitcoin world, guys, because the crypto fear and greed index is in neutral. And if we continue to drop the way we are, by tomorrow, this will be in fear. And so I'm taking things that have done really well and that are in the greed, and I'm moving them into things that are in fear. And that's the best setup. You want these two to be different. You want to be able to arbitrage between them, especially if you have a tax-advantaged account. Real quickly, the CME Fed Watch tool, let's just look over here. I want to make sure that we understand where we're going for the BIPs in the future. So it looks like right now we're at current target of 475 to 500. There's a 12% chance we stay there in the November meeting. I doubt it. And an almost 90% chance that we lower by 25 bips. That's what's going to happen. December, without major shifts in economic data. December, we've got another, again, 82% chance that we lower it another 25 bips on top of the 25 that we do in November. This is the base case. I think this is most likely what's going to happen unless we see just major changes. While I'm in here too, MicroStrategy, let's just look real quickly and see what the multiplier is versus their NAV, their net asset value, what they have for Bitcoin holdings and the company's worth. They're at 2.5x NAV, guys. So that was this morning, probably before market opened, and they dropped 1.5%. But this is why we sold yesterday. Okay, this is why we do it, guys, and this is why I post my trades to you guys. Again, I'm not a day trader, not really my thing. But when I go over here, like there's a reason. Oh, I got so much work to do in this weekend, and I will do a lot, guys. I promise you. If we just go over here and look at my trades, where are they? Where are they? Where are my trades? My portfolio. Today's trades. Yesterday, I sold a shit ton of things. I sold MSTX. Look at this. MSTX down here, MSTX up here, and then I sold hood calls, hood calls, hood calls. Hood calls, average of 35% in gains for the day. MSTX, average of probably 9% on the day. And then I bought a bunch of other stuff. I bought ARGT, my Argentinian fund. I bought a bunch of iron. As you can see in here, I bought some BITX. And then I bought some Micron. So I spread the wealth amongst things that I think, have less downside risk. There's a reason why we do this, right? There's a method to the madness of what we're trying to accomplish. All right, let me just roll through chat a little bit more, and then we need to watch this video because I want to see what she has to say about the Fed rate cuts and also what she has to say about small business. Disease King NYC. Nope. Okay. Robertus. Hey guys. Hey Jesse. Whom do I have to thank for membership gift? Thank you a lot. So cool. That was Danny. Up above here. You can thank Danny. He's a great dude. He helped out. Danny Guo. I'm so bad with foreign names. I'm sorry, guys. So bad. All right. Casper Holt, thanks. Robertus, Danny. Okay, you guys already answered it. Rocky A, glad to see you on chat. Rob, Johnny Utah, yo, good morning. Green Bean, heat map, going after longs. Yes. Dario, Arc K, Arc G, sorry, 16 January 2026, $50 open interest, 28,370, have big potential. Yeah, I think they do. Again, I think that's the one I'm in. I don't know. Is it? I think so. I'm not selling MSTS until MicroStrategy hits 800. You could do that. Just remember though that you have daily rebalancing that lowers your returns on it. So you got that working against you along with the multiplier, right? So just remember that stuff and you're fine. But and 800 seems a little high. I wouldn't hold it. Again, this is the daily rebalance acts as theta decay. That's the only thing I would caution against. All right, let's see here. Disease Kodak, people think we won't go up until the election, so maybe we go up before. That's kind of my thesis, but again, also, like I pointed out already, guys, we have had one of the best times in history. So if I just roll back down here, for anybody that might have missed it, the rolling year-to-date performance of the S&P 500, and again, this is like the big stuff, right? Is the best in the last 24 years. So just keep that in perspective when you're thinking about it. All right. Did I cover... Kevin says, did you cover CLSK dilution concerns? Yes, I don't have any. That's my take. And again, that vote is going to be coming up. I don't remember the exact date. Does anybody know the exact day? I should probably put it on my calendar. But I don't have any concerns about it. I hope they do it. I hope they get approval for it. I would rather have them diluting shares that are denominated in dollars than I would have them selling Bitcoin like Cypher did to get energy. I think that's fucking stupid right now when we're getting ready to launch. So that's my take on it, and I don't have any concerns about it. Rashab said, hey, Jesse, are you looking to buy any options for IRON? I have not looked at it yet. Now, if we crush down to 57,000, will I convert IRON into some options and maybe try and find a play there and then publish it right away on X so that you guys know about it to everybody who subscribes? Yes, I will do that. Kamawa, Jesse, could you talk about the multiplier ETFs, how they work, and how to play them? Just think of them as it's better to do short term than long, okay? It's better to do short term than long because the greater the multiplier they have, the more they rebalance. I won't go into all the fundamentals of how it works, but if you watch my Option 101 video, if you haven't already seen it, make sure you watch that, and that will give you, here, I've got a link for it. Let me see, right here. I'll just pop that in since it's right in front of me. Watch my Option 101 video and think of the multipliers, look at the curve on it and learn about how options have theta decay, and think of these 2x, 3x funds as steeper theta decay. So they lose value greater over time. And so again, you can hold them for longer periods of time, especially with something that has a really strong asymmetric bet, but you are losing that percentage of return. So if it says 1.75x or 2x, you're not going to get that. If you're holding it over a long period of time, maybe you only get 1.4x on a 1.75 or 1.3x. So you just have to think about that as shorter dated vehicles, okay? All right, AVP 546 says cover coin, please. We did that a little bit yesterday. I'll try and do that later. Not jumping into too much more of that stuff right now. Some good chains, maybe 2025 and January 2026. For options, yes, that's true. It's probably going to be, I would say, mid-2025 is probably the latest I'd go, maybe a July for an option. Because, again, we know that every other Bitcoin cycle, the Bitcoin and altcoin markets have died by the end of the year, like November, December. So we don't want to go into January 2026. Kamau, Jesse, could you talk about multiplier ETFs? Okay, I did that. Casper Holt, who buys S&P 500? Lots of people. John Mars, hi team. Okay, cool. We got through all that. Let's get to this video real quick. We're going to talk about Fed rate cut. We're going to see how smart this lady is. If she's not very smart, we might jump out.
All right, let's get back to the markets. Just under an hour to go until the opening bell on Wall Street. Our next guest likes mid-caps in the near term. Joining us right now is Jill Carey-Hall. She's the head of U.S. small and mid-cap strategy and senior U.S. equity strategist for
That retarded fake smile is killing me, but we're going to give her a chance.
Bank of America Global Research. Why mid-caps?
So I think, when you think about Fed cutting, obviously this is supposed to be a positive for small caps. They've actually underperformed since the 50 basis point cut. And I think the reason is a lot of investors are now looking at the fundamentals for smaller companies, and they've still been stuck in an earnings recession. We haven't seen that recovery to positive growth the way that we've seen for larger stocks. So I think mid caps could be a better hedge for the near term. They've seen better earnings and guidance trends.
So yes, we've talked about this a billion times, but the larger containers flow into the next, largest containers, and then into the next, and to the next. It's dialing down the risk curve, right? So she's not wrong so far.
And they've historically still done well and oftentimes better than small caps following the initial Fed rate cuts historically. So I think for those that want to tilt down the cap spectrum, that's a better area than small caps right now.
And she said down the cap spectrum, so she's kind of following the same thesis. But yeah, I think she's right.
Now,
we had somebody tell us yesterday that small businesses still have to pay about 10% interest on average to get a loan, even though the Fed has cut rates.
And Best Answer says not to hold them for more than 30 days. I don't think that's a bad thesis. So, again, ideally, your options plays, you don't have to hold that long. These multipliers, you can go beyond 30 days. If MicroStrategy is doubling between now and spring and you're in MSTX, it's not the end of the world. But again, don't think of them as a long-term hold. I would not hold them long-term. I do agree with them 100% on that. You could go above 30 days, but the less you hold them and the more, the better. Again, yesterday was a great opportunity, guys. It was you got almost 10% on MSTX in a day, and I was able to take a decent chunk of profits. I don't know if it's 25, 30K, it was something. And you want to enjoy those opportunities and pull out.
At this point, is that part of the thesis that for small business it still takes a while, even after the Fed starts cutting rates, for that to trickle down?
Well, I think certainly for some small businesses and others maybe more tied immediately to the Fed funds rate. I think overall, one rate cut is not going to solve the refinancing risk that small caps face. You still have about half of their debt that's short-term or floating rate. So the more rate cuts we get, the more that helps to mitigate the refinancing risk that a lot of these companies face. But there's also some sector specifics. There are sectors like real estate and tech within small caps that even if we get a handful of rate cuts, they still do face a lot of refinancing risk.
Are there sectors you like within the mid caps too?
I think overall, within both small and mid caps, I think this is an environment where, you want to focus on themes or styles, even more so than sectors, because, within small caps, even though we've still been tactically cautious just given the fundamental backdrop, obviously, if we're in a soft landing, which is our base case, and if we're in an environment where the data holds up, the Fed's cutting rates, if we start to see revision trends and corporate commentary turn around, then maybe later this year, once we get past the election, it could be a better environment for small caps. Usually volatility, which small caps are negatively correlated with, stays high ahead of that. So I think for now, just focusing on stocks that have positive rather than negative revisions, those have been rewarded. Higher quality stocks and, even stocks that have dividend yields, because as the Fed's cutting rates, that should drive money.
Yeah, honestly, what she's saying is just very pragmatic and smart, okay? So she's saying, hey, make sure that the companies are making some money. Make sure they don't have a bunch of negative revisions. Make sure, maybe go to mid caps before you dial down into small caps. This is pretty traditional, smart knowledge she's passing on, and it's probably the right path. So again, and like the stuff, this speaks to the things that I'm invested in, okay? So this speaks to the hoods. This speaks to the PayPals. Hood getting a little long in the tooth. I'm really glad I sold as much as I did yesterday. It was fun rotating out of that. And again, I've still got tons of money. I've got 6 figures in this, but it was nice to get 35% profits on my calls yesterday. You can never hate that. But this is starting to, again, rebound. And once it gets up here, if it does a move to 75, it's not going to be as interesting as it was. But this is one of those things where it's like, okay, This company continues to grow. They're doing well. They're expanding their product lines. The fundamentals look good. The macro looks good. Vlad just keeps crushing it. And then he's got Amit hanging out with him too, enjoying the ride. And so, like, this is just a great company. And again, so you benefit from that, right? Like, that's a safe place to sit. PayPal, again, growth. I think strategic. They're very strategic right now in regard, like they're doing massive buybacks. They've got tons of cash. No financial issues whatsoever. And look at this launch, guys, from where we were, where everybody was shitting on me at $57 when I was down just a massive amount of money, well over $400,000. Yesterday, I was down negative 2%. Today, I don't know. That'll probably get a little bit worse, but whatever. You look at the massive institutional buying down here. It is huge. Look at this. Look at this trough, this non-existence. This indicator is beautiful. If this came from Danny, I gotta thank him for that. And then I gotta put it on more charts. But look at this. Look at this wasteland down here where there's no red, and then all of a sudden, just boom, massive buying power. Look at this. Maybe PayPal's doing some of this. Maybe institutional. It's probably a combination of a bunch of them. But this is a company where they're just going to revise higher and higher and higher. And this is technically like the mid to low large cap zone she's talking about, benefiting greatly where the financials look great. This is the kind of stuff you want to invest in. You don't want to be just super speculative and buying like the stupidest of shit. You don't want to do that. You want to invest in things like this. And if we look at PayPal, again, people love to call this PayPal and shit all over it. But if you looked at the actual company, the shares outstanding is insane, just plummeting. The net income, what did they have last quarter? $1.128 billion in just excess capital. Their operating expenses are under control. Total payment volume is increasing. Transaction margins have been flat. Active customer accounts finally turning up. Revenue segments continuing to grow. And they have new leadership that's set to make this get just better and better and better. And their forward PE is 15.85. This thing doesn't belong in the 10s. It belongs in the 20s. It belongs in the 30s. This thing could double just from that alone. You look at stuff like this. You look at companies where the insiders, what are they doing? Since really Q1 of 2022, there's more buying than selling by insiders. A lot more. So these guys know that the company is worth a lot of money. Institutional ownership is only starting to curve up. Look at how much it dropped since March of 2020. Short interest is low, and estimates for this company continue to trend higher. So could they be $1.5 billion in a quarter or two for net income? Yes. Could they be $2 billion? This is the stuff you look towards, man. This is the stuff you buy. You buy the undervalued plays. If you're still playing off of a Palantir that's running a PE ratio that's in the 200s, I don't know. I think you're just playing with fire, and you're going to get a lackluster return. Again, this thing could be 300. This PE ratio could be 300 in the next month if it keeps going up the way it is. And don't get me wrong, there's great growth here. There's great revenue strategy. The company has solid fundamentals, but eventually you're going to get diminishing returns because from a technical level, it's been screaming overbought for a very long time. It's just, you got to think about rotation, guys. Think about rotation. I will cover coin. I'll do that in a little bit here. I actually want to jump into other stuff. We got more actual news events to cover. Let's look again at China, see if there's anything interesting in here. So I did want to point out, so this is Brad Setzer. He's very interesting. He's an economist. He's got a very long thread here. I've still got to read through some of it. There's a lot in here. He focuses a lot on China and the rest of Asia. A lot of good data points in here. I'm going to try and cover all of them. But the main thing I wanted to say here is he said Asia's good surplus. He said basically the chart that shows that we're not deglobalizing, right? We're a little, maybe on how little of it has fragmented. So this good surplus, though, I want to say this. This is not a positive thing for China right here. China's in red, obviously, and the good surplus that they have is huge. And that's probably only going to get worse. But I said the narrative, I do agree with him. The narrative of deglobalization is a myth. That's not happening. But the places that benefit from globalization will change as geopolitics continue to weigh on China. And I do believe that to be true. I believe that China will see less benefit from this. They'll probably see a larger surplus and just and larger inventories as they're trying to dump on the rest of the world. But geopolitics is going to hurt them. They're not going to benefit. Countries like India, Vietnam, Mexico, Argentina, just the rest of the world that's embracing capitalism that's doing a good job with embracing the ability for them to be able to help out with globalization and be on the right side of history and not with the communist dictatorships is going to benefit. And again, this one from Zero Hedge, it's from yesterday, but I didn't talk on it and I want to. It says biggest Hong Kong crash since the great financial crisis. Now, Hong Kong is the canary in the coal mine for China, okay? It's been heavily abused, just brutally abused, okay? So if you look here, look at this. The biggest one-day drop since Lehman Brothers. Lehman Brothers. Nothing comes close to it for the Hong Kong index. So this is signal, guys. Again, this is the first mover in China. China is in a world of hurt. Now, I said in another post today too, I said, should you short China right now? Fuck no. Don't even touch it. Stay the fuck away. Literally overnight, there's a meeting that's happening too in China right now. Overnight, they could talk about another massive stimulus plan. Will it actually help them? No. Will it create more liquidity in the world around it? Yes. And will it create more capital outflows? Yes. But you want to stay away from it. The Kobayashi letter I put, or he said, talk about turn of events. Hong Kong's Hang Seng just crashed 9.4%, posted the largest drop since 2008, and the second largest drop since 2000. So again, the only events that were worse than yesterday were the great financial crisis and the dot-com bubble. And what was yesterday to us? I mean, I made over $100,000 yesterday. So this says a lot about what's happening in China. It says over the last 3 weeks, China's stock market was up nearly 30% on stimulus announcements. Again, just stay the fuck away. Just stay the fuck away. So much danger in this market. Please don't hurt yourself. I also posted this. It said, India bulls remain optimistic. This is from yesterday. I talked about it, but I want to talk about it again. It says, India bulls remain optimistic despite concerns about foreign investment shifting to China, along with rising oil prices due to Middle East crisis. And I put, if you're shifting to China, you're the exit liquidity for companies like Bloomberg. These guys, right? Their customers, the ones that really pay the big bucks, the Bloomberg terminal and beyond people, they're not buying this shit. They're not listening to these articles. They're counter trading them. Okay. So stay the fuck out of China. That's the gist. All right, real quickly, let's go into Bitcoin. So Dylan LeClaire, I love him. He's great. He said the best thing any company can do is to buy as much Bitcoin as possible. I 100% agree. Crypto Rover said Bitcoin will always go the most exponential after. He said the halving, but what he means, I think, is the elections. It's after the halving and after the elections. History is exactly repeating. So we see the elections that are coming up. We see what the price of Bitcoin does. It could totally trend. Again, if you look over here from where it peaked to the election time, it was pretty much flat, right? Well, we could go up a little bit or go down. We'd be pretty much flat too. And then the election happens, and then we go parabolic. And that is what is going to happen. So I hope you're ready for it. Also, my boy Jake, he tried to get me onto space yesterday. Sorry, Jake. I should do that one of these days. Never done a space. I don't know. It's just like audio and shit. I don't even know how easy it is to trade or bring up like a visual representation of something. I do need to do it. So if you can catch me, Jake, let's do something. He said, Bitcoin, what are the odds that apex of this ascending triangle is literally right when the election is? I'd say pretty high. Pretty high. I mean, again, this could totally happen. Maybe it happens before and then back tests. But I think the election will, after the election will go. Bitcoin Archive, just in Coinbase customers can now send Bitcoin to Taproot enabled wallets. This is good for security related stuff. I love this. Just another innovation. I don't think people realize this, but Bitcoin is constantly getting updated with code. It isn't dead. Okay. Micro to macro. Again, I guess that's me. I don't know why I had to say that. If this current administration was smart, they wouldn't let this happen and would instead add to the strategic Bitcoin reserve that real Donald Trump wants to create. I agree with this. I would not sell this. And I don't think they're dumb enough to, but boy, if they are, they just gave the presidency to Trump, because you don't dump $4.4 billion of U.S. government seized Silk Road Bitcoin right before the election and not suffer major impact when the crypto and Bitcoin community is one of the largest, actually probably the largest financial contributor right now to elections. You just don't do that. It's not smart. James goes this in more detail in his Octa. You guys need to watch this. This is his on-chain TA, he calls it. It is a great, out of all the things that he does, this is probably one of the best. I would definitely recommend watching it. We love James from Invest Answers on this channel. RR2, oh, we covered that yesterday, just talking about how Bitcoin's the best performing asset. You know that. That's all good. And let's see how Bitcoin's doing this morning. We have 10 minutes, 9 minutes roughly, guys. Getting a little baby bounce, not much. Again, I posted about this under my subscribers. I don't know if that actually came up in here. Let me refresh real quick. I don't know if you have to refresh to get the bookmarks to come up. Let me see. Maybe I didn't pass it, or maybe it got. The bookmarks are so dumb in here. It could have like dropped way below too. It's really weird how they work. Yeah, I don't see it. And maybe it's because, this is a subscriber only. Again, I'm going to stop posting those and talking about them. But let me see here real quick. Let me see if I go. Oh, this is another great one for the Tesla stuff. We'll talk about that in a second. Oh, and here's what I was talking about. So this isn't all states, but it's a lot of them. And it shows new September voter registrations, and it shows how Republicans are up 337,000. Democrats are only up 210. And then some of these are in key swing states. You can see Democrats showing up more in Colorado. I mean, not surprising whatsoever. Florida, we can see almost double for Republicans versus Democrats. Looks very good for that swing state. North Carolina, almost double. So very much, statistically accurate in that regard. And all others is a huge number in North Carolina. It's shocking who consider themselves other. I would say that those are going to be leaning towards Trump with just how things are going there with this natural disaster and the response from FEMA. If you look at it objectively, it's slow. And I watch a bunch of videos. I don't post them all because people get really pissed about me getting political. But it's just not good. It's a not good situation. And then turning people back, and then with the advent of YouTube and people being able to literally tell their stories, you can see the truth if you really want to, right? So, and I've seen a bunch of it. So that's not going good. I think and even the polls are showing that shifting more towards Trump. Now, Pennsylvania, again, roughly that 2x. But then you got the stacking of legal and illegal immigrants that have grown substantially. I think Pennsylvania saw like a 400% increase in illegal immigrants and immigrants that have been stationed in that state since the pandemic, or since the current administration started. And then what was it? Which one was really bad? There was like a 700 plus. That was Michigan. Michigan saw a 700 plus increase in illegal and legal immigrants in that country since 2020. So just massive numbers. But let's keep going down here. I want to see if I can find this one chart. Oh, and this, I'm going to talk about this real quick. Again, it's political, but just listen to this. So this is Chicago, right? What I said in here, I said liberal cities have some of the worst education programs in the country. I say this all the time, but your cities have to be safe above all else. If your cities aren't safe, you're going to be struggling, okay? So let's look at this real quick here. It says the government school system has become more about jobs, programs for adults than an education initiative for kids. And I don't know if this Chicago. I thought it was Chicago, Illinois. Yeah. So this is Chicago. So this shows Chicago public schools add staff while enrollment drops. And to be clear, and I showed another graph. This is the educational system across the board, especially since 2020, but really for decades. You can see administrative and again, the Department of Education itself. Not even principals, assistant principals, and teachers. Teachers are almost non-existent. Look at this. All teachers up 5%. Regular teachers only up 1% since 2019. This is an insane number. And enrollments have declined by 10.5% in Chicago. And the employees, all employees, especially the DEI, all these other crowds, like the administrative bureaucracy, has went up 20. This just shows why our educational system is failing all across the country, but especially worse in liberal cities. Again, these cities aren't safe. The kids have to have a greater chance of being shot and killed than they do getting a fucking diploma. So not exactly a great thing. Let me see what else we have here real quick. Let me get back out of here. This is losing the vein of thought of what I wanted to talk about, but I just can't pass these up. They're too good not to. Again, we talked about the uncertainty index. Oh, this right here too. Now, I evidently did not get this added to my Bitcoin one, but I gotta play this for you guys. So let me just save this real quick. This is that skip the HBO documentary. It's bullshit, and you gotta hear this. Bitcoin man. Let me see. I'll catch up with chat first. So he says, I was thinking of getting a job in Chicago public school system. Fucking do not do that. I mean, you can, dude, but definitely don't go south side. Don't go south side. But yeah, I don't know. It's such a mess. I feel bad. I love Chicago. I used to live in the suburbs in Des Plaines. Lots of Jewish people in my school. I think a third of my school, maybe 40% of it, was Jewish, and so they would all leave for Hanukkah, and then so they'd be gone for like, what is it, 11 days or whatever? Yeah, I think that's right, 11 days. And then all the Christian people would be gone for Christmas holidays, and so like for a while there, when holidays were happening for Hanukkah, and it might have been larger. Maybe it was like 60 or 70% of the people in my school were Jewish, but like most of the school was gone, and a lot of the other people that were there in Des Plaines when I went to school there, they were all like foreign and spoke different languages, or people like me. There were like maybe 25-30% of them were like white Christian, whatever, but it was just wild. It was wild. Chicago is a wild melting pot. Before everything that happened, it's gotten even crazier now, but not in good ways. But it was fun. It was fun being around just a bunch of different people. But again, if it's dangerous, it's not so much fun. All right, Oak said, Jesse, if people are serious about learning the markets and the moves of the whales, I just started reading the Wyckoff methodology, and is making me understand price movements. Wyckoff is a good one. You spelled it a little incorrectly, but yeah, it's a good technical pattern for understanding markets and accumulation and reaccumulation zones, or distribution and accumulation and reaccumulation and all that stuff. Alex Garcia, Jesse, if 2007 crisis came today with all the knowledge you have, what would have a surprise like it did back then? Or do you think we'd see it in advance? So you could see it in advance in 2008, man. We literally had a housing market that had adjustable rate mortgages that were like a couple of years long, and then they were fixed rate for like 2 years, 3 years. And then they switched to ARMs, adjustable rate mortgages that were much higher interest rates. I even had one myself. And then at the same time, they were lending to everybody, even if you were completely unqualified. And then at the same time, we had to switch rates, and people just got decimated because everybody was speculating on them. You had a waitress that might own 3 homes that they were all flipping. You could see very clearly the market was incredibly overextended. Those things do not exist right now. The housing market is very underbuilt. We do have debt. We have the highest credit card levels in history for debt, but at the same time, we have the highest wealth that we've ever seen by a larger margin than what our debt is. So the net worth levels for people are much, much higher, especially for the top 60% of the country. And so the bottom 30 to 40% are really getting fucked right now. They have high interest rates that are going to get better, but they're high. And they bought cars after the pandemic when there was a chip shortage, when cars were 50% more expensive than they were before. So they're upside down in their auto loans, but none of that matters. We also have a student loan debt crisis issue, but none of that matters. I mean, Biden's been forgiving a bunch of those debts, and student loans are guaranteed by the government. And so we don't have any of the issues that you would normally find. Now, we will have issues if we keep going up like crazy in the stock market, and then liquidity starts to drop because it's cyclical, right? Then we start to run into problems. And if we look over here real quick, before I get to this other video, I do want to talk about liquidity. Let's see what my buddy Michael Howell has to say, see if there's any new releases on his end. I don't normally like to show too much of his work, but I do it every once in a while because I think he does great work. I think he charges maybe it's $75 a month. I'm not even sure. It's a decent chunk. But I think it's highly worth it. Let's look here. He's got his latest weekly on global liquidity. I won't read all of this. If you want the good stuff, you need to subscribe. But let me see if he's got his standard global liquidity chart in here. He doesn't. I want to find that real quick. Let me just see if I can find that. Where is your beautiful global liquidity chart? This is just other people. There's a lot of good stuff in here. Tensions and repo, I don't care about that. Let's see if we have anything over here. You know what? Maybe I'll just look it up. Cross-border capital global liquidity chart. All right, so let's take a look here, okay? Images. Because everybody works off of cross-border capital's global liquidity charts, right? And BJZ. Thank you, man. Opening bell in 1 minute. Thank you, sir. All right, we should pull that up in a second. And it's right now. So let's do that, and then we'll get back to global liquidity. But you guys do need to see this chart. It's very, very important. So let's get back to that. We'll go back. We'll do this. We'll skip the rest of what she has to say.
Appreciate that very much. We'll talk later in the morning. Jay Gray in Fort Myers. Let's get the opening bell here in the CNBC Real-Time Exchange. The big board today, it's Empire State Realty Trust celebrating the 46th annual Empire State Building run-up. And at the NASDAQ, it's Advertising Week New York celebrating its 20th anniversary as we managed to undo some of that pre-market weakness.
Yeah, and this has been a consistent pattern. Now, yesterday was very interesting. We looked very bad, and then we suddenly got the bonds. The bonds started going our way. The market is still attuned to the bond market. Interest rates are going up again, and yet we saw...
All right, I might want to listen to what he's saying for a second, but I just need to confirm. There's no fucking way NVIDIA is up 4% today. I mean, again, we got the summit. There's no fucking way it's up 4%. That is so much. That is so much money. That is so much money. This is not a bear market scenario right here, guys. This is fucking insane. If they're up 4%, no, okay, that was residue from yesterday. Okay, that makes sense. So they're up another percent, not too crazy. Block's up 0.5, AMD's up a little bit. So really markets in 0.29% on the dollar. The VIX is up a little bit. Coin is up a little bit. Bitfarms, PayPal's up a little bit. Cool, SoFi, DLO. It looks like, so we're not seeing too much pain in the markets. We'll see how these settle. What's really hurting today? Let's see. Shanghai. Everything's Shanghai, right? Lots of pain. Yeah, wow. Just fucking devastated markets. BABA, feeling a little bit of pain, not too much. MSTX down today. Not crazy, guys, for Hood and MicroStrategy to take a breather today. That's why I was selling a bunch yesterday, right? So this is all good. It looks pretty decent. It's interesting to see DLO being a leader on here. Again, Latin America could be coming around. I showed you guys the chart where emerging markets are sitting way lower than they should. But let's get back real quick. Global liquidity. So I want to look at some stuff here real quick. Let's see if can I get a bigger image? I can. Sweet. Okay, so this is actually much higher now. It's up here. It's up here, right around this level. So these cycles, you can see how accurate they've been going back historically. There are some times in the 90s where they didn't have the deep troughs. But again, you can still see the cycle, right? You can see the peak. You can see the trough. You can see the peak. You can see a trough. And then the timing was off on this one around the dot-com bubble, but I would just argue that's because of what happened around the dot-com bubble. Again, the 2008, so a little bit before it, if you would have known that liquidity was dropping down here, it's like 2006, 2007, you probably didn't benefit too much. We saw liquidity going way up. We saw liquidity getting really high up here in 2007, but then what happened? The 2008 great financial crisis. And so then we really pumped liquidity and peaked it out in 2009, right around there. And so global liquidity was at its top. It went back down. It doesn't always mean markets are crashing, but you can kind of see a pattern here. And you can see how the 90s, 2000s were a little rougher, but look at this in the 70s and all the way up into like the 80s, how just clear. And again, even into the 90s, you get very clear signals sometimes. And we've had some of that more recently here as well. And so I want to just reiterate, when global liquidity ends up peaking out, it's probably going to be a time where we need to be a little bit worried. Now, global liquidity was weird in the 2008, 2009 because they just shoved a ton of it in there to boost markets. And so global liquidity, but though when it reaches its peaks and it starts to roll over, normally you have issues. Now, again, in 2008, 2009, we saw the greatest amount of capital being created to stimulate markets that we'd ever seen in history. It wasn't even $1 trillion, but it just blew away everything. So that was enough to give markets the ability to roll for a while, right? So, but right now, again, we've got global liquidity coming to an end in 2026, the beginning of 2026. So we could have issues with markets starting to roll over around that time, and we would definitely want to keep an eye on it. And again, in 2021, you could see that global liquidity peaked. This was after the pandemic. We got right up to that peak perfectly, and it was, again, one of the reasons we got so high on that was because of just printing massive amounts of dollars and creating just crazy incentive programs that just put out tons of money into the system. And then what happened afterwards, with the highest rates in history, we ended up having this just drop down. And then by about about the beginning of 2023, we saw the bottom. And what happened with the stock market since then? It's just went up, and global liquidity is going to continue to print for a long time. So the thing I'm just saying, the history of this stuff goes back quite a while, and there's a lot of opportunity, I think, in money that can be made here. Let's look again and just see what the updated with markets settling here. Let's resort this and see where we're sitting. I'll refresh just to make sure we're getting the latest and greatest. So again, coin taking a turn today. Is anybody shocked by the fact that coin could actually be bouncing after MicroStrategy has crushed it so much? I'm not. Block is up today. Biddy, so that's the short Bitcoin one, is up today. Flux is up today. The VIX is up a little bit. Nvidia is still up. So again, I think it's probably going to be a down day. Palantir is only up 0.1. PayPal is still at 0.2. Cool. I like to see the strength. But let's see the ones that are getting hit the most. The ones that are getting hit the most are not a surprise. MSTX. Iron's actually going down a decent amount. Maybe if I find a way, maybe I can pick up more of that. Hood is down 3.2%. Again, just very happy about taking profits yesterday and diversifying them into other things. I wish one of the things I bought was Iron, not doing as so good today. But again, with Hood being down 3%, I was up 35% on my options. So even with Iron being down 3%, it was still a pretty good bet, I think, that's been placed there. So Mara down 2.24%, Tesla down 1.65%. So again, down market, not super surprised by any of that. Let's listen to what these yahoos have to say for a second.
Mortgage refinancings, wow. When rates go up, the things go down. David, we are at a moment so sensitive to rates that it's almost as if you can track it week to week about what the Fed can and can't do.
Yeah.
And if they don't get rates down, then suddenly you have a stalling of refinance, stalling of mortgages.
Those over-levered or highly levered companies, they're in the algorithm clearly, and you just see them yo-yo every time rates move. I think Warner Brothers Discovery, for example, shares of which had a little bit of a nice rally going, and then boom.
Well, that's in
back
the basket,
to below
huh?
7.
That's in the basket.
Definitely in that basket. I noticed yesterday weakness, and it's not alone, but I just point that out because it is a handful of names to keep an eye on that are typically considered to be in a particularly, let's call it, long-term precarious position. No short-term maturities, but longer term, and certainly would benefit from lower rates potentially over time.
Or a change in
those companies
administration,
then go up or down.
So that you could have more consolidation. More consolidation.
Yeah.
Look, Carl, I think that the market, you correctly hit on the 2-year anniversary. This is a very much of a 2-year anniversary kind of day. It's like, well, wow, maybe I should buy stock. Oh, no, look at interest rate. Let's stay away. Oh, geez, downgrade Microsoft. And that's been this whole consistent, let's get people to trade. Now, I think that if you just held certain stocks that have been overly traded, you'd do so much better, but you feel like, wow, I don't know, the futures were down this morning and China's not so good. I worry about what some Fed person's going to say, and that's...
Oh, real quick, Daniel Dibb said, remember the $20 call options on CLSK for the 18th of October? That person must be praying. Yeah, again, this is why I don't like really short-dated shit, right? I think that CleanSpark is going to skyrocket between now and spring, but I still have calls, I think, for June or July, right? So you got to give yourself time with options, guys. Don't do short-dated shit. You'll get wrecked all the time. 90% of the people that hold options, it's maybe just a hair lower than that, end up not being out of the money and not making a dime on anything and losing it all, everything they had in their position. So you want time. You want to trade in and out of these things. You don't want to hold them till the end.
That's how you lose money.
Well, I'm thinking of the upgrades today. Honeywell.
All right, real quick, we'll listen to those upgrades. Yes, Rocky A, that person needs to watch the Options 101 video. Do I still have that? Let me see. Is that it? Nope, that's the referral link. I'm going to grab that real quick, and I'm going to throw it in the chat again, guys. If you have not watched this video and you're touching options, you're doing yourself a disservice. You need to understand that time is money when it comes to options. You need to use leaps. I think James does that too, right? I don't even know where he is now. He might do shorter dated ones, but leaps are my baby. They're my bread and butter.
Affirm, Home Depot, Lowe's, and Love, which you already did. Yeah. JP Morgan yesterday neutralizing their long defensive, short cyclical because they...
It was most likely a whale since he bought a few million worth. Jesus, I hope so, dude, because if he just like bet everything on short dated, oh, I hope that's not true.
I think this data post FOMC might mean the business cycle runs up again.
Well, I know. I think that's hard to happen because I shouldn't say that. I had Mr. Gibson on from Paychecks, and the number of small and medium-sized businesses continues to grow, which is really incredible, backbone of our country. And there are just pockets of strength everywhere.
12-month forward EPS, all-time high.
I know. At the same time, you do have some notes saying that lower-income people not doing well, and there's struggle. And Jay Powell is very sensitive, the Fed chief, to the idea that we're now in a less equal posture. At the same time, wages are going higher. I mean, David, if we're not at this moment, someone might say, you know what, when are they going to raise? And yet the sensitivity to rates is so high that if they said raise, then you know that businesses would just pull back.
When are they going to raise?
No, I'm saying that the data is talking about the data being pretty positive.
Yes, it is. It's seemingly positive, though nobody's talking about a raise. It's just a question as to when we're going to get the next cut.
Well, how about credit delinquencies? I don't know. I mean, if one more company upgrades a firm, that was what I was worried about. People worried about credit delinquency. But buy now, pay later does not have that. I'm just saying,
Morgan Stanley goes to 37, equal weight. Higher income users getting attracted.
Well, how about I have to go to the teen survey because there's something that I've been pushing that Doug McMillan watches the show. What's the matter?
Nothing. Go ahead.
There's another video I have to find. I don't even know if I found it yesterday. It just talked about all the stuff. I do need to find that. I'll try and see if I can find it, guys, on another screen here in a second while this is playing. It talked about just all the revisions upward in markets. I don't think I played it yesterday, that are happening across the markets and how beneficial they're going to be to the economy going forward, and how this was just one of the best setups they've seen in a while. I don't think I played that yesterday. I'm going to see if I can find that for sure, because I think that's something that will be really, really beneficial to you guys. So let me see if I can find that while we let these guys play out here for a while. Eric said, whoever gifted the membership, thank you. I appreciate you. That was Danny that did it, and thank you very much, Danny.
Walmart is the place that upper income people shop. Remember we used to hear that there were Mercedes in the lot at Costco? No, now there's just kind of a, younger people drive really kind of cooler cars than we do. And they're in the lot of Walmart. Walmart is filled with people that you never expected would be going to Walmart, which is middle to upper income.
They get a lot of mileage out of this teen survey at Piper Sandler, don't they?
They sure do.
I mean, they go all over the map. Apparently, they watch, at least the males, teens watch Amazon and cable. Who knew? They're still watching cable, male teens?
But are they watching it through YouTube? Are they watching through
probably.
YouTube?
We know that goldfish remain teens' favorite snack.
Do you know that
I haven't gotten out of my teens when it comes to goldfish.
This is like at least 4 straight reports where goldfish has been #1.
Okay,
goldfish is incredible.
Mark Klaus
great snack
from Campbell's has done some great extensions of goldfish, and I like Campbell's here. I think it's one of the best. If you want to be in the food stocks, they have a very defensible position.
Purity. Just go with the old-fashioned, straight-ahead goldfish.
The other surprise is Nike on footwear preference and athletic wear, just #1, report after report.
But slipping, but not, New Balance nipping. But it made me think that the Nike term, which David said would take multiple years, may not be as difficult to accomplish if you have someone who knows shoes as opposed to someone who knows PayPal.
I was just quoting any number of analysts, of course, that came out last week warning after those earnings, of course, as well, that this is a marathon, not a sprint for Nike. By the way, do we have any sense as to the accuracy of this Piper Sandler teen survey and whether it really is meaningful in any way?
You really had to go there?
Sure, I had to go there.
Why did you have to let the facts get my good
we brought
story?
up the fact that Nike, time after time, figures so prominently. And meanwhile,
Still looking for that video. One sec, guys.
You had a guy dismantling.
The kids aren't buying Nikes anymore.
You had a guy. They didn't ask, like, by the way, do you still wear Nikes despite it being dismantled by someone who shouldn't be the CEO? That's not how the questioning goes. It's not like that.
Guys, I got to get to Boeing this morning because we haven't yet. The stock is down 3.3%. The news is, of course, Boeing withdrew its contract offer with the machinists union after essentially negotiations have broken down. More than 32,000 Boeing machinists. You may recall.
Boeing is such a shit company. I would not own that.
Walked off the job a few weeks back, September 13th. Boeing according to Phil LeBeau, losing what, about $1 billion a month or so, or costing them as much as that. We talked at the outset about the free cash flow losses mounting, or how they would mount. Well, now we're going to get to start to count, given we're approaching a 1 month since they walked off the job. There's a capital raise that has been discussed of some $10 billion. When will that take place? Perhaps after earnings are reported from the company towards the end of this month. There had been an expectation, perhaps, that you would wait until you signed a new deal with the unions, but it may be that, in fact, the capital raise takes place without a deal. And they don't, Jim, seem to be very far. I mean, they're still talking about trying to get the pension back, the machinists, which is just never going to happen.
These are about as far away as I've ever heard. This is, look, Ortberg does not seem to be a firebrand new CEO. It's not as contentious as, say, the longshoremen were. But, David, this is a cash flow story. And it is a company that it is too big to have a problem.
It's another company whose market value is below that of
One sec, still looking.
Jensen Huang's net worth.
I do have to say this, guys. I don't know how much I pay for this. I don't even remember. But I do like my CNBC membership because I pay to get rid of all the ads, the bullshit, to where I can stream it to you. But I can also go back through their entire catalog of videos and find whatever they've talked about. I'm imagining Jeremy Lafargue does the same kind of thing. But I find it hugely beneficial. It's awesome to be able to have access to all of this and be able to pull it up when you need it.
I hadn't thought of that. I know that things should be measured by that exclusively. I was more thinking about the fact that it's a duopoly, and if one of them goes down, then we are all hostage to Airbus. But you'll have to excuse me for not being broader.
But you should be thinking about things in relation to Jensen Huang's net worth.
No, okay, let's go back to
actually, that's how we should measure all market caps now, above or below Jensen Huang's net worth.
Yeah.
We could also do Zuckerberg's or Musk's or Bezos's or Arnault's.
Let's go back to capitalism for a second.
Okay.
Now, what is Ortberg's?
He's the CEO of Boeing.
Right, but I mean, he comes in, and I thought he's going to spend a lot of time on the factory floor, maybe get a little bit more of a rapport going. David, this does not sound like a rapport situation.
No.
Sounds very, very
rapport.
Very difficult.
And those astronauts are still stuck up there at the space station. They're happy about it, by the way. They're astronauts. They want to be in the space station.
What have you been in communication with them via Jensen Huang's space initiatives?
They're astronauts. I'm guessing that they're happy if they got an extra 8 months when they were only expecting to be up there a couple of weeks.
It's hard being on the road for work.
Do they have cable there?
By the way, we didn't mention S&P, the credit outlook, potential downgrade to junk.
On Boeing, yes.
Oh, that's so right.
By the way, I'm looking back at the Wells underweight move in September. We assume a $30 billion equity raise by 26, which is more than some of these things.
So that's through another year and a half.
They knew about this possibility so long ago, and when they still had a market cap that would have raised a lot of money.
I think I found it. I just clicked the wrong thing. 1 second.
But no, they had their head in the sand. David,
I'm looking at something, Jim.
It's
yeah. I'm doing it.
You get 100 if you bet the Mets. What is that? Take the Mets out.
I don't bet ever on anything. I'm a purist in that with the goldfish and with bet. I don't bet.
I'm telling you,
period.
Goldfish
Not even do fan. I just root for my team. I don't even do fantasy.
Yeah, I'll buy.
Let's move on from Boeing to another B name, Bayer. Sometimes I say Bayer, Bayer.
Are you going to talk about
It's the German company that bought Monsanto.
All right, I think I found it. Just 1 second here. Let me bring this over.
It does take us to our talk of the tape, and it is this resilient market. Let's welcome in Adam Parker.
All right, so this is 19 minutes, but there's some parts in here I really want to cover. Let me just make sure that it's the right one here real quick. Let me jump ahead. Yes. Especially, This is good stuff. So let's listen to this. There's a lot here to understand. It's why I'm still very bullish on the markets.
And Adam Parker.
I mean, one of many reasons.
He joins us now, Trivariate Research, the founder and CEO, also a CNBC contributor. Welcome back.
Great to be here.
What is your current read on the market and what's been a really noisy week or so?
I mean, Jensen is in New York today telling
To be clear, this is from yesterday morning.
All the institutional investors that there will be return on investment for NVIDIA and calming people down a little bit. Because when I do my meetings in this last week, I'd say 3 or 4 times it comes up, hey, I think one of the biggest investment controversies is what will the return on all the capital spending be for the hyperscalers? And so you get the CEO of NVIDIA in town saying, calm down, and I don't know if guys went out and bought more or whatever, but that stock acts well.
They actually did.
Yeah.
I mean, they're buying more. It's up 4%.
He's meeting all the big investors. He comes around regularly. He's doing his normal kind of Boston, New York trip, but I think he knows that one of the biggest 5 or 10 investment controversies across the whole stock market is, will companies see a return on that? And then the answer he's telling me is, yeah. I mean, after lunch meeting I went and looked at the healthcare stuff on NVIDIA's website just to get excited about some of the applications there. So for sure, I think that debate. People know that the quarter's going to be fine. It's not for quite a while, but that maybe they feel a little better about that debate than they did before he went around and came to town.
Do you feel a little better about this trade then? The overall mega cap tech trade. Now this is back above $3 trillion in market cap.
I still think that two things. There's 2 currents there. One, I think semis you want to be overweight for 1, 2, 3, and 5 years. Okay, I like the trade. I don't think I'm smart enough to know exactly what's 3 weeks. It pulls back 20, 30%. But NVIDIA was at 14. It went to 140. I wasn't smart enough to sell it down.
To be clear, this guy right here, he has a lot of connections with everybody he talks to in the investment world. So he has some interesting perspective.
100. I'm not smart enough to. It's a long.
Okay, so you say
in the whole complex.
Then don't pay attention to the price action really in that space.
I don't.
Also, to all the people that normally bitch about CleanSpark, it's up almost 1% today. PayPal's up 0.73%. Flux is up. SoFi's up. Mara's up. And Palantir's up 0.34%. So we're seeing some of these things, again, rotation where we're seeing outperformance and things that haven't done as well. This is good.
I don't think so. What I think happens with growth investing is only when you get in the top decile, the most expensive 10% on enterprise value to forecasted sales, then you get in that alarm area. But as you know, a lot of the semi companies' revenue is up a lot and their estimates are up a lot. And so the valuation isn't crazy for a lot of these names.
I had Rick Reeder on of BlackRock earlier today on Halftime, and he came across as, he described himself as basically an uncomfortable bull.
Yeah.
A lot of money around, so it's hard not to be bullish, but then he looks at the multiples and he's like, I'm a little uncomfortable. It sounds like you guys share a view that way, right?
Yeah, I don't mind being associated with in the same sense with him in any way. So sure. I think there's certain names. We're working on a research note at Trevor where we're looking at stocks that have been re-rated. Like I could tell you, I think Costco is an amazing company. I think we've all been there. It's a good store. We like some of the operating characteristics, but there aren't that many companies that are 250 billion plus in revenue that traded in the low 30s times forward and now traded 50 times forward. Like at some point, it's hard you get a little nervous about, you're uncomfortable a little bit about the valuation, even if you think it's a great business. So I don't think the Mag 7, or if you want to say Big 6, whatever, are really at that level.
The only thing I wish they had a faster speed for these videos in CNBC. Let me just see. Like he's providing some value, but not enough. I want to get past kind of his part. Let's see here. Yeah, okay. I want to get right about here. All right.
So that doesn't change your broader view?
Well,
if they're not going to stimulate as much as maybe you thought they would?
Man, it seems like the best signal you want is to know what they're going to do one day in advance, right? And then you buy casinos and copper, and then they tell you they're not. You short them all.
Down today.
Yeah,
you look at the casinos.
Somebody's making 50% in both directions. It just wasn't me. Look, I know Tepper and others thought the China thing was real too. A lot of smart people. We'll see. I think there's still a skew to the positive, what they could do fundamentally. I never thought you were going to see it in the earnings right away. I just thought I'd get in front of it with multiple expansion. I still like copper anyway, so I think you can own something like Freeport with demand exceeding supply. So I think you want to be neutral to constructive here into earnings and guidance. I don't see any reason to get too negative because we made it through. There's no real pre-releases and there's lots of things to own.
Yeah. All right, let's bring in Keith Lerner of Truist Wealth.
All right, Keith Lerner. I actually real quickly need to see if I can look this dude up. I like him. I like him a lot. All right, so let's listen to this.
Max Kettner, HSBC Global Research. Gentlemen, welcome.
Oh, I'm sorry. I do like Keith Lerner. It's HSBC I'm most interested in. What did he just say his name was? I need to hear it.
Real pre-releases and there's lots of things to own.
All right, let's bring in Keith Lerner of Truist Wealth and Max Kettner of HSBC Global Research. Gentlemen, welcome to the program. Max, you're first. What's your view?
Yeah, so we're still pretty bullish. I mean, you guys were talking about being uncomfortable bulls. I think I would describe myself as a very, very comfortable bull. We've been bullish throughout really the last couple of months. We've never really believed in this story around the U.S. consumer being or feeling much more strained than consensus has thought. And I still really would believe in that story. I do think in terms of the positioning going forward, I think you want to play a bit like the opposite of what worked in Q3. So it's more going into the tech stuff, into materials, into discretionary as well. So really playing a bit more cyclicality, really playing that, in fact, the high frequency data, particularly since the beginning of August in the US, has really, really been picking up and been pretty solid. And I think that just got validated by Friday. I think we were really waiting for that one data point out of the labor market where everyone really sort of realized, look, it's not just the activity data, which might be lagging, but it's really across the board where the US is just doing pretty fine. We're still looking at the nowcasts of around about 3%. So to me, it's a bit like playing the opposite of what worked in Q3, taking your bond proxies, your utilities, your real estate as your potential shorts, and really the longs being more the cyclical stuff now for the next couple of weeks.
This guy has 158 followers. When was the last time he posted on here? He reposted August 29th of 2023. So he's not on X a lot. That's a bummer. He's great.
I find it interesting that you want to play the opposite of what worked, because in large part what worked was anticipating what was going to happen. Fed was going to cut, the economy stay strong. You'd want to be in some of those cyclical areas. Why do you want to go opposite of what was working? I mean, there is something about momentum and a trend, no?
Yeah, there is. But I think, look, at the end of the day, when we look at the last couple of months, I think people were freaking out a bit too much with the July CPI. And then, of course, this unwinding of the carry trade at the beginning of August. Let's remember, I mean, at least me, I've had no other discussions other than how much of that carry trade needs to be unwound. That was pretty much the only discussion we had in August. And now September, the discussion was around, why do you still want to be long risk? It's this bad seasonality period, and look how well that worked in the last 2 years. And of course, that's going to be exacerbated now by election uncertainty. So why would you possibly want to be long risk? And look at some of the data, and of course, the labor market is showing.
All right, here comes some signal, guys. Listen really fucking closely.
Some signs of weakness. I think particularly with Friday's data, but also I think one of the things that are still really underappreciated is the revisions of the national accounts data that we had a week and a half ago.
I've got to look this up too. I haven't looked at it specifically myself, but listen to what he's talking about with these revisions of the national account data.
Which, at least me personally, I've never seen a set of revisions that literally was revising every single subset of the data higher. Whether that is incomes, whether that's wages and salaries, whether that's dividend income, interest income, whether it's GDP, GDI, whether that's profits, literally every single thing just got revised higher, and was destroying a lot of the bearish sort of pushbacks, right? This sort of, GDI versus GDP divergence. A lot of economists used that in the last 2 years. That narrative got destroyed. The narrative around, profitability is only a Max 7 story. Well, actually, it's economy-wide profits that look much, much better. The narrative got destroyed around wages and salaries being much stronger, which actually points to perhaps a healthier labor market than we thought. So a lot of the narratives, a lot of the bearish pushbacks that people have been giving me in the last couple of months have frankly been pushed out of the windows.
Fucking love that. Love that. So much signal in that yesterday. I'm sorry I forgot to include it. I just couldn't find it. I'm trying to get better at pulling up these episodes in CNBC and really honing in. I'm watching this bullshit every day for you guys to pull out the cream of the crop, okay? I'm sifting through mountains of garbage because 90% of it is fucking trash. 90% of it, guys, looks like this, okay? It looks like a combination of Mark Cuban and Kamala Harris. But I sift through all that trash just to try and find you guys the good stuff. And that is definitely some of the good stuff right there. We're going to listen to a little bit more, and then we got to get back to the Bitcoin stuff too. We got a lot to go through again. I've got a lot more today, guys. But Kettner is very, very smart. And he's honing in on things that are signal, and I love that kind of person. I wish he had more than 158 followers on X. I might have to try and boost him. Maybe we can get him to come back. Maybe I could figure out how to get his contact information and get him on there, because this is great.
Keith?
Yeah, sorry. That's jarring. I shouldn't just throw that out to somebody. This is Mark Cuban's face on Kamala Harris's body, and it says, it's from Patrick Bet David. I love him from Valuetainment. This guy's brilliant. I don't know, why am I not following him? I love him. But it says, whatever it takes to be the head of the SEC and go after Elon Musk. And it's got, yes, Cubanala, whatever the fuck we want to call it. Sorry, that's like really tough to look at. My apologies.
Santo, and has been just paying the price ever since.
Are you putting that as the worst acquisition? It's even worse
right
than
up there.
Snapple?
It's right, Snapple. AOL Time Warner.
Oh, that's the wrong one. What am I doing here? I don't want to be here. That's more stupid shit from these guys. I do want to get that playing currently, though, and then mute it. Because, again, I'm trying to watch this shit, I'm looking at a bunch of other stuff, and then I'm trying to pull out the cream of the crop for you guys. It's a lot.
Is the environment as bullish?
And if you appreciate all of that, can you guys hit the like button and comment and do all that other stuff? It very much helps the channel.
As Max paints it to be?
I think overall the backdrop is still positive, and we're still bullish, and we're still sticking with the trend. I think if you look at some of the basic pillars of this market, don't fight the trend, the price trend's still up, and don't fight central banks. I mean, maybe the Fed slows down a little bit, but if the economy starts to weaken even some, they'll probably be more aggressive. I do think that China will continue to provide stimulus. I think the market got a little bit overheated on a short-term basis, but I would be surprised if they're going to let this thing just roll over this quickly after coming out with all this ammunition. And one thing I will say is there's been this kind of, 1 month we're arguing whether the economy is heading towards recession. The next month I'll be saying it's moving too fast. Corporate profits have been unbelievably stable. They're making 52-week highs every week. And then, as you talked about earlier, I think technology is going to reassert its leadership. And we're starting to see that today. We're breaking to a 2-month high. The earning trends in tech is still the strongest in the market that we have. And I think we'll see more of a rotation back into that area. So net, of course, we're going to see some hiccups along the way. But in our view, the underlying trend is still one that moves up over time.
Okay. Are you comfortable, Keith, if yields remain elevated?
At 4%, I'm comfortable. I think where I feel a bit less comfortable is if we start moving, say, north of 4.25%, 4.5%. At 4%, I think on a relative basis, stocks still look relatively attractive. And more importantly, credit spreads are extremely tight. So we're not seeing anything systemic there as a whole. And again, if yields are moving up somewhat because the economy is showing a bit more resiliency, that should be a positive for corporate profits.
Yeah, I mean, look, the best thing is to romanticize you're a contrarian bear, and then you're right. Like you want everyone to be negative, contrarian bull, and then you're right. You want everyone to be negative. You want to be bullish. You want to be right. I think the problem right now is everyone, I think, is pretty positive. I think most people.
I won't disagree with what he's talking about. Again, my buddy Income Sharks. I was posting this earlier. My buddy Income Sharks always talks about how. Again, right now, my view, I'm like, hey, I'm still bullish, but I also took a lot of profits in things that were 35% up yesterday and up to almost 10%, right? So, it looks like we got wholesale inventories. We're going to cut to that in a second. But I do think it's not dumb if you made a lot of money in other stuff to be taking some profits when we're sitting at, high levels of greed. Again, I think they could go higher. I think that the counter narrative might be right there, but he's making arguments that say, hey, yeah, you want to play the counter, but what if you're not playing the counter? What if everybody's really bullish right now and we could see some kind of drop because of something happening with Israel, because of some gray swan event where the government is dumb enough to sell $4.4 billion in Bitcoin. Or maybe the event with Tesla doesn't go well, or maybe something happens with NVIDIA and they trip up. Again, there's always, the markets will find news to shit on. Like there'll be days where everything is great and you're making money and everything they post on CNBC is wonderful and shiny and everything is super fucking bullish. And then the CNN Fear and Greed Index will be like in the 80s or 90s, and it's like I should say in the greed side where everybody's fucking optimistic, and then the next day it'll be the apocalypse for the news events on CNBC, and everybody will be pessimistic, and all the bullishness that everybody had is gone, and everybody's depressed, and nobody wants to watch the videos, and so he's right. That could be happening too. We do have, like the chart I showed earlier, the best performing market for the S&P in 24 years right now. Right now, we're at the best point in this time in history that we've been in for 24 fucking years. So he could be right. We could see some things roll over. I definitely think we'll see rotation.
That I talked to are positioned that things are going to grind higher, that the year will end.
Really? I mean,
and again, he talks to a lot of people and has a lot of connections. Okay, very social dude in the investment world.
Talk to a lot of top, institutional investors, hedge fund folks. They don't sound like wildly bullish. They're idiosyncratic stories
this
that
is some
they're
good
bullish
signal
around
right here.
But I think overall, I think people feel like some chips are coming off the table in the Nvidias of the
people
world.
sold some tech, and I think they're starting to get back in. I agree with what Keith said. I think just if you talk to people who are stock pickers and they don't do macro, they'd say, look, my assumption is we end a few percent higher. The trend's your friend. Fed's going to help. We get some uncertainty out of the way. And corporate stuff looks okay. I would have thought in July that we would have seen some companies say things were slowing in September, and we really didn't. I mean, you had FedEx kind of miss, you had a couple of one-off things, but you didn't see like a real slowdown. So
certainly the jobs report wouldn't suggest that there's a slowdown. I mean, it was slow.
Well, let's see. We've got literally jobs and inflation data tomorrow and Friday.
But not, you're still
comes out every week. People seem to forget that.
Still doing jobs at a pretty healthy clip.
Yeah, and so the question is, they cut a little bit and the unemployment rate goes down 30, 40, 3.5, 3.7. Like, how can they cut more? So, like, it depends. What I don't know right now, and I think it's an investment controversy, is how much, is the multiple right now embedding that they cut another more than 50, 75, or is it just we do 50, 75, the economy's okay, we've right-sided, and then we don't do anything for a year or two, and maybe not doing anything is great. That's probably bullish. I mean, that's bullish.
Strategist targets, Max, continue to go higher, and they make the argument that the multiple is fair currently where we.
I mean, that was a good argument from Adam Parker. That was a good argument. I can't disagree with it. Let's see what we get here from Max.
We are in the stock market, even though it's it's historically high. What do you think?
Yeah, I would say so. I mean, when you look at the multiples, one thing I always have a bit of a problem is when people just look at like 10-year, 20-year averages.
Totally agree. You guys remember that chart from just the other day where we were looking at PE ratios, historic PE ratios, and just how crazy they were at different points of market tops and market bottoms, and how there appeared to be no real pattern there, and how they can fluctuate greatly over periods of time, over decades and decades. That was the one from Seth Golden. It doesn't you just can't look at these and just assume that, oh, hey, we're too high on the PE ratio. It's all coming to an end.
PEs, or they look at the S&P multiple around the first cut and then all those sorts of things, because what it does, of course, ignores when we look, for example, at margins. Why have margins in the US expanded so much in the last, call it 7-8 years? Well, a lot of it was the 2017-18 tax cuts. Look at return on equity. Look at the sort of the one-off bump that we had in return on equity back then. A lot of it, of course, was also tech. And frankly, if you look, for example, just price to book of the US versus the rest of the world, and you ask investors and say, look, do you want to pay that high of a multiple for the S&P, right? Do you want to buy US equities at such high multiples? They generally, of course, say no, and there's all these valuations.
But we're hitting record levels for valuations for the USA versus the rest of the world. It's just a huge number right now.
Concerns around it. But if you phrase the question slightly differently and just show them a line of, here's the S&P ROE and the S&P margins relative to the rest of the world, and look how since 2010 that's pretty much a straight line up. Would you buy that? I mean, pretty much everyone says of course they want to buy that.
He's right.
So frankly,
he's right.
If you buy US equities, if you're long S&P, you're paying a higher multiple simply because there is the higher profitability. So you're paying a higher price just simply for the better earnings quality, the better earnings.
we're the cleanest shirt in the dirty laundry. We still have, so far, strengths in capitalism. We have the best software market in the world. Again, everybody wants to be here. They don't want to live in communist China. They might get a rental property there. They might hang out there for a while. They might do business in there, but they don't want to be under the control of a communist dictatorship. So it's just, he's right. He's right. This is still the place to be. And for the foreseeable future, it will be.
Delivery, better and higher profitability, and therefore I'm pretty comfortable with that. The only thing where I probably would slightly disagree is around the sentiment and positioning right now. At least when we look at our measures, in fact, which is extremely surprising, is when we look at our stuff, we're not seeing neither a buy nor a sell signal. Even though the S&P is close to an all-time high, we're still not seeing sort of even a tiny whiff of a sell signal.
There is absolutely no irrational exuberance right now. There's no like GME GameStop shit. It's all pretty moderate. And again, you climb that wall of worry because everybody's concerned and people aren't irrationally exuberant. Markets usually have their very, very like cyclical peaks when everybody is saying like, they're talking like what they are with Palantir right now. If we looked at Palantir chat, every one of them is fanboying and saying like, this is the next big company. It'll be bigger than Tesla. It's the biggest company on earth. We got it at the ground floor. It's going to go 1,000% in the next 2 years. Like everybody's like, it's going to be $1 trillion company in the next couple of years. They're all fanboying like crazy. That's when things roll over, okay? That's when the U.S. market will roll over. It's not right now. It's when everybody is fanboying about how it's unstoppable and nobody said, like, it can't go any lower. It's never going to happen again. AI is so powerful. Robotics are so powerful. It doesn't matter what our debt is. It doesn't matter that we're not servicing it. It doesn't matter that liquidity is coming near the end of its cycle. We're just going to keep going up. And that's when markets will roll over. It's not right now when everybody's worried about the Hurricane Milton, about the cleanup in the last one, about the presidential elections, about all these about the Middle East and whether that it's going to blow up, about whether oil is going to go higher, about whether inflation is going to return in commodities. This is not when markets roll over. This is when markets go up and they feed off of that fear. So I 100% agree with what he's saying.
Signal. And I mean, I've just been in the US touring the East Coast for 2 weeks, and we've not really seen an awful lot of people being bullish, at least not as bullish as us. So, yeah, I still would say there's a bit more upside, particularly from sentiment and positioning.
I think, I mean, my experience, I focus mostly on U.S. equities, so I'll defer on some of your conversations. Most cross-asset people I talk to tend to run more bearish on U.S. equities because they've got to think long-term. They've got piles of money behind them, whether it's the big private wealth networks, and so it's harder for them to say, hey, we've been a little underweight U.S. equities, worried about valuation, now we're going to add. They're kind of tethered to the little bit neutral call. When I talk to folks who are U.S. portfolio managers, which I do all day, I think they're directionally skewed to the positive. I do. I think people think we're going to end higher. We did, I don't know. I do meetings all day, and that's where people's heads are.
All right. I got to bounce.
Yeah.
Thanks, everybody.
Good to see everyone.
I appreciate it.
See you, Keith.
Adam, thank you. Max, Keith, thank you.
So again, different takes from Adam on the left that thinks that, you know, again, everybody's positive right now, which means that maybe we have a trough this month, even though historically October is the best month in like every metric, Bitcoin, elections, regular market cycles, like it's one of the best months, but we also have the best performing year ever, or I should say going back to 2000 in the S&P. But I honestly got to say, Max made really brilliant points too. Very brilliant points about the fact that we're not really overextended. Just a really great interview. I loved it. I hope you guys enjoyed it. It was exciting. Now let's get back here real quick. I do want to go back because we did have, let me see here real quick. Let me see if I can find it. 1 second. Don't want to hear that right now. Want to go back a little further? Right here. We need to listen to what we had for wholesale inventories. Let's listen to our boy here talk about it. Rick Santelli, Mr. Red to Purple Face.
Good morning, Carl. Yes.
One of my favorite people on here.
Trade on the wholesale perspective. On the inventory side, this is a final read. So up 0.1%, now replaces up 0.2%. And remember, these are third quarter numbers, which means that we may be taking a bit off the GDP when we get our final look. And if you look at the trade sales side, down 0.1%. This is a 0.5% below what we were expecting. We're looking for a number up 0.4, and this follows an up 1.1%. So we see sales weakening a bit, turning back negative. They were negative, of course, in June. They turned positive with a big number, 1.1% last month. So in some ways, even though this wasn't expected on the sales side, it is a bit of a take back to a very strong sales month in July. We see that yields are up. As a matter of fact, if 10-year note yields top yesterday's high yield, which was 4.055, basically 405.5%, that would be the 6th consecutive session that 10-year note yields have traded higher than the previous day's highs. They continue to build momentum, pushing rates higher. Really an unusual dynamic after the Fed's half-point rate cut, and we'll get the minutes.
Not really unusual if we're getting a soft landing and people are looking for greater yield in stocks and Bitcoin. It's not really unusual. I mean, it's unusual that we would have a soft landing, so that part's right.
To that meeting at 2 o'clock Eastern. Sarah, back to you.
Yeah, it will be interesting to see how they talked, how close a call it was, whether to cut 25 or to cut 50 at that last meeting, although a little stale after the jobs report. Rick, thank you very much.
And we are creating a lot of co-pilots.
All right, so Honeywell, I think, had revisions higher, too, in their earnings. This is all interesting stuff. Let's go back real quick, though, and look at the economic data, and I'll get caught up on comments. So United States wholesale inventories, again, they're not that bad. So they're expected at 0.2, again, flat, but they're about moderate. This is probably a decent return to normalization from where we are right now, considering the huge trough that we had during the pandemic times. And then also after that, where we skyrocketed with massive inventories. This is probably a return to normalcy. I don't know if there's a lot of signal here. Now, let me real quickly, I'll jump over and we'll look at, not oil. Oil is down almost 3% underneath the 200 weekly moving average. That's fascinating to see. Let's see how the dollar's doing too. The dollar is up 0.27%, trying to break above. Again, I could move this up. It doesn't really matter if I do, though. So we could, again, I kind of have to redraw this. I should redraw this here just to show you what the max is. Let me see, is that it? Yeah, that's close. Let me just pull this down a little bit. No, it's a little bit higher. So we could see strength in the dollar that brings us to right about here based upon the actual candles. Actually, it's even higher than that. If we get the angle just right based upon the candle bodies, not just the wicks. Wicks could be resistance, and that could be where it stops right there, but I'm just trying to show you different views on how this stuff works, okay? So I'll lock this for now. So theoretically, we could still climb up to where the 50 and 100 moving averages are. The 50 is always purple. The yellow is the 100. The orange is the 200 moving average. These are the ones I always use. But we could go up to that, like the 103 range, before dropping. But the interesting fact for today, I think, is going to be, let me save that real quick, is going to be how the markets are performing today. And again, there's some down, but Palantir up again, 42. Again, 40, anywhere from 40, 44-ish is where their all-time high is, all the way up to 50, I think, before they really suffer some kind of major rejection. And even then, it could go higher. It's just how this thing is in a parabolic upside. I would not jump into it. It's definitely a better play than China. But look, SoFi's up in there too, 2% on the day. DLO is up, Flux is up, so we got some small caps starting to do well. We've got Coin up 0.3, we got PayPal up 0.5, Microsoft up, Nvidia up. So today's interesting because you got the Dow Jones up, you got the Russell small caps up. You actually, and again, ARKG of all things is up 0.32% today. Mara's up, Tesla's still up. So it's just very interesting that we're seeing strength in the dollar, but we're still seeing markets pushing to the upside. Palantir will stop. It's when everybody says stuff like that, Daryl, that it changes. So just keep that in mind, man. I know people are so emotional in trading and investing. They think the party never ends. It reminds me of Tesla when it was up to 1,200 for a PE ratio, and people were buying at those levels, and we're still not even back to them. We're way underneath of them. So I don't know. Whenever the emotion's telling you that the party won't stop, you should probably check yourself. Lowe's 94 said, it will be important to look at sentiment outside of the Tesla echo chamber once we are in the 400s. When Tesla, not really. You could just look at the technical levels. when we get into the 400s. If we've gotten there fast, that will be a big indicator. I care more about, so you get sentiment from technicals and fundamentals and financials, right? If the fundamentals and the financials are strong and your technicals are becoming exhausted, there's a chance you could retrace a little bit, but time will be on your side. If the fundamentals suck and the financials still look okay and the technicals are at peak, you could get a wicked turnover, right? Like Tesla, when it jumped 3,000+% in a period of a little over a year and a half. Sentiment was really high and it was horrible because it was very overextended on all levels over the short term, right? So you got to always check your emotions because it can fuck you big time. So we'll be looking at the macro, the fundamentals, the financials, and the technicals in that order, just like we always do, and try and keep our emotions in check. Again, you got to use common sense. Disease Kodak, maybe there will be a wild November rally. I think it's very possible. Again, that's where I think sentiment lies right now, is that nothing for October, maybe sideways to down chop, but then November rally. And again, I think there's a massive press release for sure after the elections. The question is, do we run first and then get another massive press release? That would be pretty wild. Daniel Dibb says, doesn't Tesla have its own insurance in America? Yes, across a bunch of states. Could be cheaper. Yeah, but it's not across all states. Not in all states. Yep, okay. I believe in 18 of 50. That sounds right. Still have a lot of... Yeah, insurance is a bitch. It's probably even harder than the banking industry to get into. So they've got 38 licenses on X right now, or registrations for different states, whatever they call it, to be able to have a payment service, but insurance is so much harder and competitive. Lowe's 94, by the way, I don't mean echo chamber offensively, just outside of the people who currently know the value of Tesla. Yeah, I don't even pay attention to that because those people are fucking idiots. They don't know that full self-driving is coming. They're like the guy from the interview yesterday who's like, hey, they should maybe have a robo-taxi by 2027 or 2028. It's like, bitch, there's a product release tomorrow. Are you a fucking moron? Do you pay attention to this company? Where do you work? Bloomberg. What do you make? Probably $300,000 to $400,000 a year. Fucking awesome. And yet you're still worthless when it comes to Tesla. So I don't care about that. Again, I care about macro, fundamentals, financials, and technical analysis, and then avoid the noise. Austin says, Elon's choice of words on 10/10 event product launch is interesting. I would have expected an unveil or something like that. Yeah, product launch is telling, I think, right? Product launch. Product. It's not just an unveiling of cool stuff to come. It's a product launch. That wording is very important, Austin. I agree with you. Brian Denali, me, Kevin, has over a milli in TLT calls. What a fucking idiot. I love that guy, but dude, learn how to invest, bro. Seriously. He is so bad at it. Let's just look. I mean, at least it's not in TMF. At least it's not in TMF. All right. So, yeah, this is what TLT's done. It's just, and again, we're getting to a point where maybe it'll be less painful because we got peak volumes underneath of us. So this might grind for a while and then bounce back up. That's the most optimistic scenario. But if we say that it ends right here, again, maybe by the beginning of the year, this thing starts to go up. But why would you be big into TLT right now? It makes no sense, bro. It makes no sense. I feel bad for him. I really like me, Kevin. Like, he's probably a good person. But let's look at Palantir. This is fascinating. This is what Parabola looks like, guys. This is what Parabola looks like. So let's get rid of all the stuff. Let's just ignore the stuff, okay? This is what Parabola looks like, where you're down at 20 and then you've doubled since August 24th. And you've got a $95 billion market cap. You're probably going to be on over 100 soon. Maybe you get to 110, 120. Again, maybe it goes even more. When Parabola starts, it's so hard to know where it's ending. But here's what I can tell you, okay? Let's look at the weekly RSI and stuff down at the bottom. The weekly RSI is now above. There's only one other time in history when the company first went public where we were at these levels, and that's the previous all-time high on the weekly. And then again, these lines that we're looking at curving up here are at their highest levels ever on the weekly for the MACD. And then if we look at the monthly, look at the monthly MACD curve that we're looking at here. It's basically like straight up since 2022. It's just straight up. And by far the highest, we're at a 76 level. You can get, I'm actually gonna mark some of this because it's very important to do so. Oh, that's not locked. Is this one locked? How do I unlock that? Let me see real quickly. How do I unlock this? I don't even know. So I'll do this. I'll try and draw up to like the 80 level. I'm going to put an alert on the 80. Oh, no, I don't want to copy price. I just want to put an alert. Add alert. Okay, up here, create. So I want to get an alert when we get towards 80 on the RSI for Palantir, because once you get 80 and above and you start pushing 90s, guys, it's game over, especially on a monthly time frame. So the technicals right now are fucking insanely bad for Palantir, but you can't tell that. Let's look at so let's take that. I want to use this. I want to watch this video, so I need to maybe save this. I'm just going to open a new tab. Let's look, though, real quickly at what sentiment is for Palantir today. Let's see, what are all the, I don't want to say shills because I like a lot of these people a lot. Let's look at what the Palantir social media experts have to say about Palantir today. Let's just take a look. Palantir CTO, events in Israel. All right, so that's just whatever. Not really saying much there. Palantir CTO, new brilliant interview. All right, Arnie, I love you, man. And it is a good one, but he had a shit take on Tesla yesterday, or autonomous vehicles. Palantir, from a bag to a 5-bagger. Again, just promoting our book, right? And I won't shit on Arnie. He's excited, and I don't blame him. Shay, again, above 42, just showing how good they're doing. Palantir is a $96 billion. The intelligent investor, Benjamin Graham, throwing that away. That guy's not optimistic. Fund increased Palantir holding by 282%. Shares, so again, optimistic. Not talking about how the fact Alex Karp sold out like what, $300 million in fucking his stock recently. Let's ignore that. He thinks it's overvalued, obviously, or needs to diversify. Let's ignore it. Not so crazy after all. Tom Nash, why I'm bullish on Palantir. And again, credit to these guys for buying and holding. They held it longer than I did. I'm glad I got out of my calls because I think I'd be up about the same amount of the 600,000 that I had made because of the time decay, even with it going up the way that it is. I don't know, maybe it'd be a little bit more. Doesn't matter though. I reduce risk. But one share Palantir or one quality shirt, hard choices. I remember one share could barely buy a Wendy's for $4. So let's see what we got here. Chris Patel is still coming out with bear takes on Palantir. Then it's only fair to revisit the day he sold his entire Palantir position. So again, shitting on people for selling early, that's a normal thing. Palantir Mafia, Palantir blowing past $41. DJ Raoul, Palantir monthly chart since IPO is nuts. Palantir, read intelligent investors caught Palantir. The dogmatic primitive value investors that subscribe to multiple screenings has taught in security analysis will always lose out. Now, I will say that's kind of a fair argument here against the intelligent investor. The value investors will miss stuff like this every time. I do agree with that argument. But my whole point here is nobody is telling you to sell. Nobody. I'm probably it. I'm probably it. I'm telling you this is a great company, and I'm not telling you to sell. I mean, whatever. It's not financial advice. I've been saying that it's got bullish or bearish divergence against it for over a year and a half for a while, and it keeps going up, and it can keep going up. It can go up even higher, but all I'm saying is watch out because you will only hear good stuff about it. You will only hear good stuff about it, and these guys will still be praising it, just like with PayPal when PayPal was. So let's just look at other stocks that people probably said nothing but good things about, right? PayPal, great example. This literally did the entire market cycle, right? The entire market cycle it did. So you probably had people bullish as fuck on PayPal up here. Bullish as fuck. Talking about how it's going to the moon, it's changing the entire world, right? Look at all the money. It went from 83 to 306. You've made all this money. It's only going to get better. It's not going to get any worse for PayPal, okay? But what was the reality of that? Like, let's just look at let's expand some of this stuff out and see what levels we saw on the monthly time frame for PayPal. Okay, look at this, PayPal, boom. Look at this. So we had bearish divergence on this on the monthly time frame. Again, much longer chart, but this thing was just a thing of beauty. It had bearish divergence on it on the monthly, and it was in the 80s, similar to where we're going to be getting with Palantir soon. And then the world fell apart and people got absolutely destroyed. Now, the beautiful thing about this is if you sold over here when you were in the 80s, because you're smart enough to realize that the 80s on a monthly time frame is unsustainable, and at the very least, it means that you're going to have very little upside to sideways chop that could last years. If you're smart enough to realize that, then you bought on the monthly here when it hit oversold. What is that? Like over here, right? In the 60s, it didn't go down much worse. Now, again, there are time frames where it's like, okay, even when this happened, maybe wait for the bullish divergence to happen first, right? Like wait until you start to see some of this. I bought way too early on this thing. I was still a year and a half early. And then you can start riding it up. But you have to realize that when long time frames, like right now, we're still in the mid. We're neutral for PayPal for the month. This is a better investment right now than Palantir is over the next year. I'm just telling you it is, okay? And again, I was singing the praises of Palantir, guys. I was comparing it to Tesla because it was so undervalued as a play. But you have to remove emotion from investing because nobody out of that crew that you saw in the Palantir crew will tell you to sell. None of them will. None of them will. And it will be an opportunity cost. You will not make as much money. You just won't, because it's not the next Tesla. I'm sorry. It's a great company. They do great things. I think they can go a lot higher than they are right now, but it's not the next Tesla. It's not the asymmetric bet that it was. And why is it not the asymmetric bet that it was? Well, if I could pull the right stock up. Nope, still the wrong one. Okay, right here. Why is it not the asymmetric bet it was? Because of this. Because it's up 630% from where it was. Oh, that's a little high. I think I got to move this just to here. From where it was in December of 2022. So in like a year and 3/4, 1.75 years, this thing has went up 620%, and it's had bearish divergence on the daily time frame going back to May of 2023, a year and a half ago. So again, just don't be somebody who's buying here. That's my non-financial advice. Moving on. All this seems bullish for Palantir. Lol. Yeah. All the bearishness, all the bearish technicals, all the fundamentals being thrown out the window. That's all super bullish for Palantir. Everybody should be super excited. I think you should put your entire life savings. Once this thing hits all-time highs, guys, put everything you have into Palantir. I think that will really serve you well over the next year. Ignore Bitcoin and the fact that it's getting ready to have its next second parabolic leg after the election. Ignore Tesla and the fact that the fundamentals behind it are insane, and that when we look at the PE ratio for it, it's a fraction of what it used to be. And don't get me wrong, the Q3 could still have like earnings on Tesla. I don't know. But the fundamentals are vastly catching up, and the options contracts are sweet. Ignore PayPal and everything that they're doing positively. Ignore Hood, ignore ArcG, ignore global liquidity falling into things that are drastically oversold. Ignore all these plays and just YOLO your shit in to something that's already went up 600% and that people have made 7x off of. Definitely a great idea. You guys should do that. All of you. Throw all your money into it right now. Make those strong bets. Give yourself no diversification, no asymmetric bets in different directions. Just take the thing that already was an asymmetric bet and that has played out its asymmetry and put all your money into it. It's a great idea. It's great. Not being sarcastic at all. All right. Let me just, I got to refresh my screen down here. I'm not really watching CNBC. I'll try and get caught up on comments. We'll look at some other stuff real quick. If you guys have any major news events that are happening that I'm not covering, please let us know. It looks like they're talking about China stocks pullback after rally. I'm going to go ahead and end this poll. It looks like you guys want me to talk at 1 p.m. So I'll be doing the FOMC, and I'll probably do the market recap too. Since 78% of you said yes, and that was 111 votes, so it's a pretty good margin. All right, let's jump back here real quick. We'll look at the heat map and just see what's moving. If anybody sees anything, oh, Tesla's up 1%. Hey, maybe we're getting a little bit of rally, This is actually a pretty impressive market today, guys, not going to lie, with very little in the way of news. Very impressive market. Let's look at Tesla real quick. Maybe take a look at Bitcoin. I hope Bitcoin's still falling. I would love to take some 10Ds. Oh, God, I don't want to talk like me, Kevin. I shouldn't do that. But I do want to take some 10Ds on Tesla and put more of that into Bitcoin. I've still got, this is by far my largest investment. And again, we're doing what we wanted to do, guys. We're literally forming the handle on our cup right now, which by the time it gets up to here will be the end of the cup and handle that gets us to the 350 levels. And it will show that we're starting our inverse head and shoulders, which gets us to the 490s. So the opportunity for Tesla is getting really good. Dang, SoFi 861, there goes down again. Did it go up and then fall down? That sucks. Sorry, bro. Yeah, let's look real quickly. So Tesla looking great. I might have to cash out a little bit. I do want to see how markets playing out in a whole. I will be selling into some of this movement like I always do. Palantir up 2%, SoFi up 1.4, still not bad. Tesla up 1.1, NVIDIA up 0.73. Again, the conference is going to be coming to an end. I think you're going to see some money flow out of NVIDIA and other things just because it's already 3.3 trillion. PayPal's up today too. Great. If I get some really big numbers on the options, maybe I sell a little bit of that too. Let's see what else we got here. Otherwise, mostly red. ARKG still down 0.28%. Not crazy. TMF down 0.4. TLT doing nothing. Meta down 1%, silver down, gold down, Mara down, MicroStrategy down, MSTX down a couple percent, MU down 1.57, uranium is down 2%. Again, commodities just rolling over all in all. Yeah, MSTX only down 2. That's not bad, actually. Hood down 3.55. Again, when you're up 10% in a day, if you don't take some profits off of that, you're going to miss out. Hood will still go up, but this is normal. Yeah, I can take a look at Fubo. Give me a sec here. I will start jumping. Meet macro to micro. That, dude, should I change my... Yeah, dude, what? Maybe I should... You know what I should do? Just to troll Kevin, I should do meet macro to micro in my market open tomorrow. Or micro to... I should do that for my market open tomorrow. I should totally do that. I think that would be fun. But yeah, let me see how I'm doing on my calls today for Tesla. I don't know if any of that's settled. Looks like I'm up about $40,000 today, probably. Across everything, sorry. Oh, no, it rebalanced, so it's about flat on the day, probably. Are Tesla calls up? It doesn't say they're up, but I think they're probably up. Is it 930? Yeah, it's 930. Let me see. 49.67 is what it has for last price. Is that what they're actually trading for? 51.10. Oh, yeah, so they're way more than that. So I'm probably up. I am up today. I'm probably up 30K today. I don't know why, but options contracts just do not update, especially if there's a low volume. But Tesla usually isn't low volume. So, but it looks like on contracts, my ARKG is up. Oh, I guess I could just show you. My ARKG is up. And again, not all this is settled, I don't think, because I am up on Tesla calls, but it's not showing it. Argentina up 0.24% today. ARKG calls up about 3,200. Let's see, those are probably all 2026. So even though this is down 0.28%, the calls are up 2.27. That's cool. So some people are buying the dip on that. I like that. We're also seeing CleanSpark getting a little bit of dip buying. Even though it's down 1.24, we're seeing people buying it at 0.75. That usually indicates bottoms on these calls when you're starting to see people buying in and see the options outperforming the actual underlying asset. What else we got here? So down on Hood, again, down steep, but that's to be expected. We made a bunch of money off of that yesterday. We were up 35% on our contracts. We don't care if they're down 6% today. Not a big deal. And we sold a good chunk, made some money. Iron down 4.1%. So again, there's always these popular narratives. AI, HPC were such a huge narrative, and now iron's just getting bitch slapped out of the miners. We should actually compare all the miners in a second. MicroStrategy still outperforming things like iron. So you got to love that. And again, they all take turns. I think iron's coming back. That's why I'm buying it. Might buy more today. Not going to lie. Might buy more iron today. PayPal up $4,700. Says the option contract's up 1%. Again, probably sitting like down 3% across everything on PayPal, probably 3% as a whole for my entire investment, which is good because I fucked up 2025 pretty bad. Tesla, again, it says it's down, but it's up. So that's going to be coming around. So these are going to be good numbers. I'm probably up to 1.1, maybe 1.15, maybe pushing 1.2 on Tesla between all my accounts. Loving that kind of price action today. Nothing to complain about at all. I do want to jump out of this real quick, and I want to just focus on miners only real fast. So let's get into that and click on this and just see how we're doing. So again, Iron, the worst of performers. Cypher, remember how everybody was into Cypher? Now it's the worst performer. Who knew? Wolf, remember how Wolf was doing so great and everybody wanted to be a part of Wolf? Now it's the worst performer. Who knew? So it's just, this is how this stuff works, guys. It's how it works. Things that outperform end up underperforming. We're still in MicroStrategy land, I think. And Mara probably coming in next. That's why these two are the least worst performers. And I like the fact that CleanSpark is in like third place out of those. So they're all doing worse than Bitcoin, but MicroStrategy by far winning. Wolf getting butchered. Iron getting its turn to get butchered. I think CleanSpark. I think Mara, CleanSpark, and maybe Iron and some of these others will start outperforming. Wolf could still have some pain for a while. Don't know that that's interesting to get into. I don't even know if I like the stock. But Wolf and their place close to the nuclear plant, people didn't like it. Why didn't they like it? I don't know. All right. Let's look at other stuff. Eric Schultz said, what do you think of Carvana? Oh, I think it's great short play in the future. Let's start looking at some tickers, guys. Let me know, guys, if you see anything crazy coming out. It looks like CNBC, they're talking about breaking up Google. That's such a long-term thing. I don't give a shit about it. I do want to, real quickly, before we get into that, I do have more to cover, though. I do want to just play this video. I want to talk, and then I want to talk about Tesla, too, because I haven't went into Tesla news. I do want to cover some of that, and then we'll get into stock picks, okay? So get ready for your stock picks, and we'll go into them in a second. Also, Bitcoin at 61.7, so still seeing pain. I love that. I think that's really healthy for the markets. I want to see Bitcoin go down. I want to see Tesla go up. I want to take Tesla profits, and I want to put them into Bitcoin. Anyway, I want you to hear this. This is the guy that HBO says is Satoshi Nakamoto. He's standing with my buddy Adam Beck, who's in the back here. I love Adam. Again, he retweets my shit every once in a while, and it's awesome to have a cypherpunk retweeting my stuff. I love that because he's such an OG. He was there for the beginning of all this, guys. So real quickly, let me play this. You got to hear it. So this is just how stupid this is.
A concept which you had envisioned years earlier, but you needed some kind of cover in order to make. And you also needed some cover.
This HBO guy is telling him why he's Satoshi Nakamoto, and he's just laughing the whole time. But just listen.
For that 2010 post.
2010 post. Yeah, because I was Satoshi.
I mean, yeah, you know, you're very concerned about all the privacy stuff. So you reach out to your old buddy Adam Back. You say, we need to do something about this, but we need to pay the devs.
Adam's just like, this is retarded as fuck.
But you can't join Blockstream because it would look too suspicious. So, you don't.
I will admit, you're pretty creative. You come up with some crazy theories. It's ludicrous. But it's the sort of theory someone who spends their time as a documentary journalist would come up with. So yeah, I'll say, of course I'm Satoshi, and I'm Craig Wright. And yes, I was definitely covering that little bit about, fees to go pretend to be Satoshi. Or not Satoshi, one or the other.
Well, why make up the whole John Dillon thing?
Well, like I said, I'm not John Dillon.
Okay.
Sorry, I'm not John Dillon. I don't know who that is. I'll warn you, this is going to be very funny when you put this into the documentary and a bunch of Bitcoiners watch it.
Well, I don't think they would be very happy with this conclusion, because you're pretty controversial within the community at this point.
No, I suspect a lot of them will be very happy if you go this route, because it's going to be like yet another example of journalists really missing the point in a way that's very funny.
What is the point?
The point is to make Bitcoin the global currency. And people like you being distracted by nonsense can potentially do good on that.
Anyway, I do agree with that. I think it's complete fucking nonsense and a waste of energy. And I think that this guy is not Satoshi Nakamoto. I still say it's Hal Finney. Oh, hey, whoa. Something from Alex Chris. PayPal. This is fun. What do we got here? Venmo. We're rolling out the ability for Venmo users to schedule one-time reoccurring payments or requests with friends and family. Oh, that's fucking cool. I love that. More functionality. That's great. Cool for reoccurring bills and stuff. That's fucking brilliant. It's basic, but man, why didn't they have this already? I gotta follow this. Why do I not follow Venmo? All right, that's funny. All right, so let's repost this too. That's awesome. So I again, I just love Alex Chris. If you look at his history with Intuit, he was like the chief technology officer there. He's a brilliant mind, and he's just doing a great job here. You asked, we delivered. Today we're launching a highly requested Venmo feature that allows users to easily schedule one-time and reoccurring payments or requests, whether it's splitting rent and utilities with roommates, managing family plans and subscriptions, or giving a gift for cash for life moments. We've got you covered. That's brilliant. I love that they're consolidating silos. I love that they're doing shit like this. This will only help the price for PayPal. So cool. So cool. Very, very smart man, Alex Chris. Very much appreciate you and all your hard work, my friend. Yes, you are a good dude. All right, let me refresh here real quick. We're going to jump over into Tesla stuff, and then again, we'll get to those stock picks. I almost wanted to see what that lady was running towards. All right, so this is one I really, again, tomorrow night, 9 p.m., Tesla We Robot product release. But this is such a great illustration from Iran. He goes into all the details, but I don't want to go into the details. I just want to show this image because I think it's so telling. It says batteries, electric motors, electric vehicles, power electronics, lithium refining, autonomy, Powerwall, Megapack, supercharger, solar roof, insurance, auto bidder, dojo, AI, machine learning, robotics, and manufacturing. This is Tesla. This is what real AI and what the company of the future looks like. This is Tesla. Do you remember all these things that Tesla is and how they're dominating in every one of them? Every one. I hope you realize that. Be smart, guys. Also, like I said, if you look here in September, highest number of Chinese insurance registered vehicles out there. And I'm sorry, this is insured, not registered. 22,600. Now, the week for October was low because it's a holiday. If you know anything about China, you know when there's a holiday, it's literally a holiday for everybody. It's just how things in a communist government work. Everybody has to do the same thing at the same time unless you're super rich. So it's miserable if you're trying to go sightsee. These guys spend entire days spending like 2 seconds trying to look at one fucking thing at one fucking place, and it's just miserable. But anyway, 22,600. Compare this to previous months. It's dwarfing. Here's the second highest one is 17,300 in March. This is a huge number, guys. This is a huge number. It's more signal that even though China has this deteriorating economy, the very top elites are still doing all right. And if they're going to buy something, they're buying a Tesla. Barron's came out with this today, and I thought it was hilarious. Tesla's behind in the robotaxi race. Why Musk must overtake rivals, and 5 other things to know today. They're behind, guys. Just so you know, they're behind in the robotaxi race. And I put, if you ever wonder if traditional finance and media is biased and or has a clue about anything at all, here's your answer from Barron's. Product launch, it's fucking happening. Again, here's the wording. This is very important wording. Watch the Tesla product launch event live. Product. And then on more Tesla-related fronts, or just everything Elon Musk, because that's what it is, we could have SpaceX because of Tesla's or Elon's pressure against the FTC. Fuck, I don't remember. One of the Fs. One of those you should. Who gives a fuck about them? Places. Because of that, and Pete Buttigieg being like, "Dude, we'll expedite." Sorry about that. And was that Pete Buttigieg? No, that might have been about the hurricane relief. Whatever, it doesn't fucking matter. Anyway, the whole point is he applies pressure to these guys using his social media platform, the thing everybody worried about. And what's happening? It looks like Starship's 5th flight test preparation is early as the 13th, pending regulatory approval. That's incredibly exciting. Also, SpaceX has given now over 11,000 Starlink satellites to people impacted by the hurricane and given them free service for the month, probably longer, in order to be able to help with hurricane relief efforts. There is no company on this fucking earth or the government that is doing more right now to help these people than this. I was listening to a short from a guy who was saying that he was trying to get past the guys at FEMA and the National Guard to help in an area, and they still wouldn't let him help a week after the fucking hurricane. And they said they can't let anybody through. And then he asked them to communicate with the other people because he had a different address he was trying to go to. And they're like, sorry, we don't have communication. Sorry, we don't have communication. The fucking National Guard and FEMA can't even communicate with the other parties and the outside world because they're missing the stuff that Elon Musk is handing out to everybody, and they probably need to get it too. Why isn't the government getting Starlink for fucking everyone? Why isn't the Guard running Starlink for everything? What the actual fuck? Thank you, Elon Musk. The Biden administration and the Harris administration will not acknowledge your work, but I want to do it right now. Thank you for saving lives and for helping people know who's hurt, where they are, who needs food, who needs water, and helping these people connect with the outside world, because you have saved lives and you're making the world a better place. And any government who can't take the time to acknowledge that can fuck off. Thank you, Elon Musk. Also, Volkswagen, this is something I wanted to get out there because you guys just have to understand. Volkswagen brand chief to Auto Motor UND Sport. They aim to regain market share with 8 new electric vehicles to be rolled out in 2027. If you've been in this space long enough, like I have, going back to 2016, 17, you know that it's always 2+ years away. It's just what you do when you don't have a plan. So there is no competition to Tesla. Just again, Starlink doing a great job. Keith Olbermann, this is a political pundit, and what does he have to say? Here's what he's telling. This is a political pundit with influence in the Democratic Party. What is he saying right now?
Time to cancel all the contracts and reassess his immigration status and hopefully deport him the hell out of the country.
Who's he talking about? Elon Musk. Elon Musk. Do we really, this is what Democrats are saying, that we need to deport Elon Musk out of this country and end his businesses and all of his contracts. How the fuck are
And if we can't do that by conventional means, President Biden, you have presidential immunity. Get Elon Musk the F out of our country and do it now.
Can you believe this? Not only do we attack free speech, not only do we attack the Electoral College, not only do we try and make it to where there's a uniparty system, but we want to deport Elon Musk. Shocking and absolutely absurd. Teslanomics, I won't go through all of this, but he just talks about how robotaxis will help with safety. They'll reduce car ownership. Again, peak oil has came and went, and how monumental this is, and I 100% agree. All right, that's it for the Tesla stuff. Let me see if there's just any other talking points. I think that's it. NVIDIA AI, do I have any more on that front? Let me just check. Again, there was the breakout. I do believe that NVIDIA can still go higher, but I think there's going to be rotation, and I think the gains to the upside are going to be limited. Hood, again, on October 7th. Have you heard of the Hood Summit? But have you heard of Hood Week? So that's going to be coming. Stay tuned for news on 10/11. So that is a couple of days from now. So on Friday, we can expect that news about Hood Week. That maybe could help the stock. So I think that's very much a possibility. And then in case you didn't hear this news, Robinhood Chief Legal Officer favored to replace Gary Gensler. That's probably if we get Trump into office. That's not, I mean, let's remember this. The Gary Gensler replacement is going to be Mark fucking Cuban if Kamala gets into office. Again, just great stuff. In case you missed it, breaking Robinhood set to launch margin trading in the UK over the next few weeks. Massive amounts of news coming for Robinhood. I think that's it. That's all I got. So let's get to your guys' stock picks, and let's look. I will do Fubo. I will do that for you, bro. You've been asking very nicely, so I will do it. Tesla, a 0.36. Let's see. Real quickly, I just want to look one more time and see how the broader market is doing. Are we starting to retrace a little bit? And again, we'll just waver back and forth. Palantir up 2.32, still strong. Doge up, SoFi up a little bit. ARGT up. Argentina's up 1%. Cool. Glad I'm starting to stack. Tesla up 0.4. Looks like a few things have pulled back. PayPal about flat on the day, and then a lot of stuff in the red, including NVIDIA. Just a lot of stuff that flew yesterday. Oh, MSTX is only up. They're down 0.54, which means MicroStrategy is almost flat. That's kind of cool. Yeah, nothing too crazy. Again, the things that are really doing the worst are the things that outperform the most. Cipher mining's getting its turn to get beat up, all that kind of stuff. So very interesting. Let's keep going. We'll leave this heat index up. Again, Google, I think, is a shit company to own. I would not own that company. I think they're set up for a world of hurt in the years ahead, especially with the Department of Justice stuff and everything else coming at them. They're just going to get consumed. I would not own it. Thank you to the 300 people that are still here after 3 hours. That's amazing. Powell not speaking, just release of FOMC notes. Oh, then I don't give a fuck. I'm not doing it. Thanks, BD. No FOMC. I'm not going to probably talk about the notes. There'll be some commentary that comes out. It doesn't really mean much. So if he's not speaking, I don't care. Real quickly, so somebody asked about Kava. I will look at Kava. So I think Kava is what I think it is. Is that Carvana? Or is that something else? Sometimes I get it wrong. No, Kava's different, isn't it? Nope, not Carvana. Kava Restaurants. That is different. Let me see here. It's growth at 35%. It's a restaurant. Holy shit, that forward PE is insane. It's because they've just started to become really profitable. So the estimates matter. This seems super rich, bro. So it does see growth. EPS doesn't see a lot of growth. What restaurant chain is this? Can you guys tell me? So more selling than buying from insiders in Q2 of 2023. I don't show any Q1 or Q2 related data. What country is this in? Is this ours? The United States? Washington, D.C. What is this? What is Kava? Can you guys tell me? I've never ate there. I don't know anything. I don't know the fundamentals of this company at all. They're growing. Their net income is positive, but this ratio, the profit, it's super overvalued right now. It's super overvalued. Current PE ratio of 356 is fucking insane. This might be like a short opportunity. It might be a short opportunity. Not gonna lie. Let me just hop over here real quick and see. We'll pull it up. I don't even know if I have this one on here, but I'll try and find it. Piper Sandler teen survey. What are they surveying teens for? I really got to add a bunch of tickers to Discord. That's going to be this weekend. Oh, dude, this is a fucking short opportunity. Oof. This feels like a short opportunity. $14.86 billion valuation. I don't know. Is this restaurant chain really going? So if we have a deep economic recession, we will get problems here, right? So I'm gonna do a Fib retracement and see what kind of this looks like. It's just assuming we peaked. I'm not saying we have. It could be happening later. This looks like I might. This is good. I got to do that Tasha Keeney follow up too. From her analysis on Tesla. I still want to do that. I don't know if I'm going to go much deeper into this. I might do a video as short. I've been looking for better short opportunities. Something with a 400 PE ratio is probably a great example of that. So this might be something where I look at puts to see, heading into maybe mid 2026 semi-annual puts. I might look at something like this and do a deeper dive. This is at the top of my fucking list right now for puts. You just gave me this at the top of my list. So if this is something where you're very interested as a long play, I would caution you. It is a dangerous valuation at its current level. So, but fascinating. Fascinating. Good morning, Jesse. Let me see. Silas. Hey, Silas. What's up, dude? Fast casual Mediterranean. Oh, I love Mediterranean. It's really good for your gut, man. It's like Chipotle, but Mediterranean. Is it fast foody or is it like high-end fast food? Justin, good morning, Jesse. Everyone, how is your dog doing? My dog's doing good. She's recovered pretty well, man. Silas, I saw an Anduril ad today and on a DC Metro bus, Lockheed Martin turf. Nice. Anduril's gonna crush it. I really got to get that on the private market. How often? 92. Kava has decent food, better than Chipotle. Yeah, it's just this valuation that's sick. And again, let's look on the weekly time frame, overbought again. On the monthly, there isn't really a monthly, right? So this is a hot thing. God, dude, I might start buying shorts on this. This might be something. Instead of dollar cost averaging into some others, just as a hedge play, I might start buying shorts. I'll talk about this more when I review it more. This is very interesting. Thank you for bringing it up. And you guys are going to fucking hate me, but I got to go to the bathroom, and I've been on here for 3 hours. Here's the deal. In the market recap, I'm going to do a lot less. Market recap, guys, I think I'm going to change a little bit. I'm going to spend most of my time for market news in the market open and then just following analysis and doing all that. The market recap, I'm going to recap things super fucking quick, and I'm going to go into charts. So I think I'm going to split these up. So just because I have to pee and because I've been thinking about this lately, I get less viewership on the market recaps as of lately. It seems like people are finding the market open a lot better time to view. That's where I'm getting, I got almost 500 views on Monday. And then we got close to 400 today on the market open, but the viewership in the market close or the market recaps is getting low. And that's fine. It's all cool. But I think what I'm going to do is I'm probably going to save a lot of the looking at the stocks and doing the financial review and stuff for the market recaps, do shorter sessions of me talking and recapping stuff. And I'll have less news to give because I'll be giving most of it in the market open. And so I'm going to try and make that real quick where like after about the first 30 minutes, maybe we get into stocks and start looking at charts in the market recap. So I think that's probably the plan. And so I'll probably skip some of these. And if you guys had ones like the Fubo right at the top of the list in the market recap for sure. But I think I'm going to separate these out and use them for different purposes because I think it's just going to be beneficial to me. And also it breaks it up. It makes it to where it helps with my own psychology on what I'm doing and just separating things out a little bit. So I think that's probably what I'm going to do. And then maybe I'll have I don't know. I'm trying to keep the weekends to myself. We'll see if I do anything there. The Sunday I like doing this kind of Sunday weekend edition stuff I like doing too heading into the week. I think it's beneficial to people that can't maybe necessarily catch the market opens on Monday. But that's kind of what I'm thinking. So for now, let's see. Sela said Kava started in the D.C. area. The restaurants decline in quality and freshness after 1 to 2 years. Okay, I believe that. I just think the valuation is fucking insane, and I would probably use it as a short. But anyway, I'm gonna let it go. I'm probably gonna skip the music today because I gotta pee and I need to run. So I will be back again, not at the 1 p.m. because those are just FOMC minutes, but we'll be back at 3 o'clock, guys. I love you very much. Sorry for dumping right when you get here, Silas. You guys take it easy. Peace out.